Please take your seats. Our program is about to begin shortly. Thank you. Please welcome your host, Natalie Brunell.
Good afternoon, everyone. I'm Natalie Brunell. I'm a Bitcoin educator and host of the Coin Stories podcast, which aims to educate people about the merits of Bitcoin. Welcome to MicroStrategy World 2024 Bitcoin for Corporations in beautiful Las Vegas, Nevada. And in honor of where we are, I'm holding a little blue chip here. It's actually from my winnings last night. No, I'm kidding. I don't gamble. That's why I own Bitcoin. But I'm holding this because we all know the term blue chip companies or blue chip stocks, right? And I've recently learned that the term actually comes from poker. And perfect for Las Vegas, right? Well, in poker, the blue chips are the highest value chips on the table. And 100 years ago, in the 1920s, the term blue chip extended to the stock market. And it described companies that were the most reliable, the most valuable, and had the highest track record of profitability. Essentially, they were the safest bets. But I think that this can also be said for Bitcoin. I think that Bitcoin is the blue chip digital asset. It is the most reliable, the most valuable, with the proven track record. And I would go so far as to say that it's not just the blue chip digital asset, it is the blue chip macro asset. Because there is no other asset that a corporation can own that has an absolute fixed supply that no one can debase. And it provides hope to all of the executives, all of the employees, and all the customers that are served. And MicroStrategy has really proven over the last 4 years that adopting a Bitcoin corporate strategy can make a successful company even more valuable, even more successful, more stable. And it's really owning a form of property that has the ability to preserve value over the long term more than any other asset in history. So that is what today is all about. It is about making companies better, making companies more valuable and more competitive. And you know, we all play the hand that we're dealt, right? But I think that the smartest move that any of us can make, the safest bet, is adopting Bitcoin. So with that, I'd like to thank our sponsors for the event today, for MicroStrategy World. Thank you so much for making this all possible. We have a great afternoon of panels and keynotes. And I'd like to introduce our first one, Bitcoin Adoption Trends, with Alex Leishman. He is the CEO and CTO of River. River is an institution dedicated to providing financial products and services to harness the transformative possibilities of Bitcoin. Alex brings his deep expertise in software engineering, information security, and Bitcoin to River, where he oversees investor relations, corporate strategy, and engineering. Alex holds a master's in computer science from Stanford, where he actually helped teach the first Bitcoin class. How cool. So everyone, welcome Alex.
Hi, everybody. I'm Alex Leishman, the founder of River. At River, we make it very easy for individuals and businesses in the United States to buy, use, and secure Bitcoin. Today, I'm excited to talk about some Bitcoin adoption trends that we've seen over the last year and through Bitcoin's life. In this presentation, I'm going to talk about some of the adoption trends we're seeing of Bitcoin as an asset, how Bitcoin is being used in corporate treasuries and its impact on business payments, and some of the technical trends that we're seeing in the Bitcoin network. So, Bitcoin is about 15 years old. In that 15 years, it's gone from what is effectively a science experiment, a cypherpunk science experiment on the internet, to one of the most valuable assets in the world today. When ranked among precious metals and public equities, Bitcoin is in the top 10, although today it might be ranked a few lower given the Bitcoin price. But nonetheless, it's come a long way in 15 years. And why is that? Well, the core reason is that Bitcoin is the first absolutely scarce asset in human history. There will only ever be 21 million Bitcoin. And Bitcoin's supply, its monetary policy, you could say, is defined in 6 lines of code in the Bitcoin core code base. And those 6 lines are right here. And for those of you who aren't programmers, what this code says is, in a very elegant way, when the Bitcoin network launches 15 years ago, every new Bitcoin block will reward 50 new Bitcoin to the person who mined it. And then, every 210,000 blocks, or about every 4 years, that amount of new Bitcoin rewarded will be cut in half. It just takes a very few lines of code to actually define this. And if you plot that out on a chart, this is what it looks like. The gold line is the amount of Bitcoin in circulation over time. We're at 2024, and at this point, most Bitcoin has been mined. 19.6 million out of 21 million Bitcoin has been mined to date, meaning there's only about 1.4 million Bitcoin left to mine. And what that means in inflation rate terms is in the red line. So the inflation rate is asymptotically going to 0. And this is the core of why more and more people have been attracted to Bitcoin. It's the first asset in human history that behaves like this. So who owns this Bitcoin? Who are the actors that have accumulated Bitcoin over the years, and what does that look like today? So we've done some research here and put together this graphic. And I'll just highlight a few important things. About 12 million Bitcoin, the largest amount of Bitcoin in this graphic, is owned by individuals. People like me and you, people who have bought Bitcoin since the very early days, people who just bought Bitcoin for the first time yesterday. Some of these people have Bitcoin in their own self-custody. Some of these people, actually most of them, are holding it on some exchange like River, like Coinbase. And this is really the largest segment of owners of Bitcoin. The second largest chunk of Bitcoin has actually been lost forever. That might come as a surprise to some of you, but we estimate that about 3.7 million Bitcoin is lost forever. And the reason this is the case is that in the early days, Bitcoin was not very valuable. It was kind of an experiment, and a lot of people played around with it and didn't back up their wallets, got a new laptop, lost their old one, and the Bitcoin that was in those wallets is gone forever. So the amount of actual Bitcoin that is available long term is substantially less than 21 million Bitcoin. And then we have businesses, funds and ETFs, and governments, these large institutions, these blue and black bars. These bars have gone from virtually nothing to where they are today, and they are continuing to grow. And that's a very fascinating trend that I'll dig into a bit more here. And then lastly, I just wanted to point out miners. Miners own, we estimate, about 700,000 Bitcoin. And the reason miners don't own more Bitcoin, since miners are the ones who are creating the Bitcoin, is that they actually have to often sell that Bitcoin to pay for their operating expenses. And they end up selling to individuals and businesses. But since miners are the most upstream player in the Bitcoin space, let's talk about them first. Those are the people that create the new Bitcoin. So what have we seen in mining trends over the years? So this is a bar chart breaking down the types of miners and the amount of Bitcoin that these types of miners have ever mined over the whole history of the Bitcoin network. And something obviously stands out. The vast majority of Bitcoin in the last 15 years has been mined by solo miners, unknown players, hobbyists, people just running the mining software on their laptop. Because in the very early days, when the block reward was the highest, and it was the easiest to mine Bitcoin because not that many people were doing it. So lots of people were coming in and playing around. And then as people clued into the scarcity of this asset and it started getting more and more valuable, mining became increasingly competitive. People started pooling their hash rate together. And mining became a much more institutionalized sort of business. The mining operations became big institutional data centers. And over time, these pools started mining the Bitcoin. Pools like F2 Pool, Ant Pool, Foundry. Now, that's not very visible in this chart because this chart is Bitcoin denominated. But if we actually switch this chart around and plot the dollar value of Bitcoin ever mined, it shows a very different trend. The biggest miners today have mined the largest dollar value of Bitcoin over the years. The biggest players today in the Bitcoin mining space are Ant Pool, F2 Pool, Foundry, Via BTC, names that some of you may recognize. They're getting increasingly large. And these players have mined tens of billions of dollars of Bitcoin. The pools themselves are the ones that are coordinating the hash rate, and then the actual mining operations pointing their hash rate at these pools are also becoming increasingly institutionalized. In fact, the largest mining operations in the world are now public companies in the United States. So we've seen a lot of institutionalization in mining. That's really the takeaway, and that trend is not slowing down. So miners deeply understand Bitcoin's scarcity. They drive the creation of new Bitcoin through mining blocks. And if we look at the Bitcoin price over time, we see some interesting trends. The biggest one is, well, it keeps going up. This is a log scale chart. But if you plot the Bitcoin halvings, and by the way, we just had the 4th halving in Bitcoin's history a few weeks ago, we see some interesting trends. Every halving is typically followed by, with a bit of a lag, a substantial price increase for Bitcoin. Now, it's to be seen if this is going to happen again this time around. We don't know for sure. We've already seen a pretty big price uptick this year going into the halving in the expectation of the reduced supply coming onto the market, and for some other reasons. But Bitcoin price is really the coordination mechanism for the actors in the Bitcoin network, and it's an important thing to pay attention to. So in the first part of this year, we've seen a pretty big price uptick, as I'm sure you've noticed. What's been driving that? Well, the halving is one, but I think it's a little more nuanced than that. Retail is not really driving the recent rally in the Bitcoin price. If you plot the Google search trends from over the last few years for Bitcoin, what you see is that consumer interest in Bitcoin is nowhere near its all-time highs during the last bull market in 2021 and 2022. Bitcoin hit its all-time price highs, and Bitcoin search interest on Google didn't really get close to where it used to be. So what's going on here? What is driving this price increase? Well, we think that one big factor here is institutions. I'm sure you all are familiar with who this is. Michael was one of the first big business leaders to point to Bitcoin as an asset and say, this is something that we should pay attention to, and here's why. And he's done an incredible job at articulating the why for people running businesses and for institutions. However, in 2020, when MicroStrategy first started buying Bitcoin, which was the start of probably the largest dollar cost average of Bitcoin in history, not everyone was convinced overnight. It took years and years for this trend to materialize and for more and more businesses to understand that this made sense for them. Because as this bet has paid off for MicroStrategy, it gets more and more attention from other people running businesses. And the proof is in the pudding here. Between May of last year and this month, there's been a 43% increase in the amount of Bitcoin held by public companies. For private companies, it's a little bit more complicated because we don't know the financial situations of private companies by definition. But we do know a floor. From self-reported Bitcoin holdings of private companies, the total ownership of Bitcoin for private companies has increased 12%. But realistically, that's an absolute floor. It's probably a multiple of that. And we've seen this at River. At River, we serve over 1,000 business clients. These range from the smallest companies, like a hot dog stand, to large family offices. And although we have high variance in the size of business clients we serve, we've seen some interesting trends in just the averages of the balances held with us. In just the last year alone, the average Bitcoin balance held by businesses at River has increased 60%. It's gone from about 2.5 Bitcoin to an average of 4 Bitcoin. And the dollar value has increased even more than that because of the price increase. So this trend is real. More and more businesses are not only buying Bitcoin, but they're buying more of it. And it's not only businesses. Governments have started paying attention as well. Nayib Bukele, the president of El Salvador, noticed around the same time MicroStrategy started buying that maybe countries should start paying attention to this. Initially, he got a lot of pushback. People were laughing at him. But they're not laughing anymore. This has paid off pretty well for El Salvador. Not only financially are they pretty cleanly in the money, but this has also helped turn around El Salvador's brand. I think before El Salvador started buying Bitcoin, most people knew of El Salvador, who knew what that country was, had heard about it for the wrong reasons, for crime, for gang violence, et cetera. And now when they hear about El Salvador, they think about Bitcoin or sort of a forward-thinking leader. El Salvador got a lot of pushback from the United States for doing this as well. But I think the United States is now realizing we have our own financial problems. And our own currency has some long-term rocks, some potential rockiness on the horizon. Both political parties don't agree on much, but what they do agree on is spending a lot of money. And our national debt is now rising by about $1 trillion every 100 days. And these numbers are so big, they don't really feel like they mean anything at this point. But I think for those who are students of economic history typically know sort of where this leads and why Bitcoin is something worth paying attention to. So it's not only operating companies buying Bitcoin. A big new door opened up this year. The first Bitcoin ETFs in the United States were approved and launched in February. This was the final door to be opened for institutional capital. A lot of institutional capital needs securitized wrappers around the assets that they buy. It fits in very well to the financial system. They can borrow against it. Their whole financial structure is set up to use these kind of assets. And now that Bitcoin is available in an ETF, a lot more institutional capital is able to accumulate this asset. And we've seen this already. Within a few months of launch, the Bitcoin ETFs have accumulated almost 1 million Bitcoin to date. And if we extrapolate this trend, which may or may not be a valid thing to do, we'll see how things keep going here. But by next February, Bitcoin ETFs might own about 7 to 8% of the total Bitcoin supply. And you'll hear a lot more from the ETF players tomorrow. May 15th is a big day. On May 15th, we'll actually see who some of the biggest owners of these Bitcoin ETFs are. People who own over $100 million or institutions who own over $100 million of these ETFs need to report to the SEC. And that will be some very interesting information to know who's been buying these Bitcoin ETFs in large quantities. I've heard there will be some surprises. So definitely something to pay attention to is these blue bars. businesses and funds and ETFs. We think that the trend will continue, that these entities will keep buying Bitcoin from the individual holders. And this will be a big factor in the Bitcoin market over the year to come. So let's talk a little bit more about what it means to buy Bitcoin in a company. Like if you're running a company, who's doing this and why, and what are the challenges? So in the early days of Bitcoin, you had people starting companies who were aficionados of Bitcoin, and it was typically the company itself was branded around Bitcoin. Maybe they were selling socks online for Bitcoin, or they were selling hardware. They were building hardware wallets for Bitcoin holders to self-custody their Bitcoin, and so they sold their hardware wallets for Bitcoin. Everything was somewhat niche and very focused. The business models were very focused on Bitcoin, and Bitcoin was more of a payments tool back then. Everyone was kind of like, I want to accept Bitcoin payments online, and that was the big driving force for a lot of Bitcoin adoption back then. But it was a very niche thing. And those were like the first companies that started actually holding and using Bitcoin. But it's hard to build these new companies, and there's a very small market. So that wasn't going to be sort of what led to Bitcoin's widespread adoption. And so now we're in a phase where the companies adopting Bitcoin are just normal operating companies. And we're finally getting over this hump of sort of the challenges and the reasons that they weren't adopting Bitcoin before. It was difficult to prioritize Bitcoin on their roadmap, and it was hard to update their legacy systems. These challenges are increasingly being solved. And companies like MicroStrategy have helped set the framework and showed business leaders how they can do this in a relatively straightforward and easy way. Additionally, a big trend that we're seeing is the quote-unquote normal companies buying Bitcoin are typically operated by somebody who personally believes in Bitcoin. And so as more individuals start believing in Bitcoin and buying Bitcoin for themselves, their next logical step is to buy Bitcoin for their businesses. And so because they're a business leader, they're able to push through some of these challenges that come with adopting Bitcoin for a company. And they're almost always adopting Bitcoin as a treasury asset. Sometimes they want to use Bitcoin for payments, but we've really seen that the product market fit for Bitcoin for most business clients has been as a treasury asset. And the interest in using it as a payments, as a mean of online payments is a much smaller segment of the market. And then the biggest addressable market, the vast majority of companies still don't have Bitcoin today. And there's a lot of reasons for that, but a big one is there's a lot of company politics that block putting Bitcoin in your balance sheet. And so if your company today is not run by sort of an orange-pilled, you could call it founder or dictator, it can be quite tricky to get anything to happen with Bitcoin. And that's the next step. That's the next wave of companies that will inevitably adopt Bitcoin as it becomes more normalized, as it becomes easier, and as it becomes less of a sort of political fight at a company because it becomes the obvious thing to do with your treasury. Bitcoin can be a bit of a cheat code for your treasury, and this is what a lot of businesses are realizing, that buying Bitcoin for your corporate treasury can unlock some real business benefits, and we're seeing a lot of success stories, and MicroStrategy isn't the only one. There's a soccer club in England, in Bedford, England, that has been buying Bitcoin for years now, and that has led to a substantial increase in the value of their treasury. They've used that money to buy better players. And for those of you who know the British soccer system, there's all these tiers of leagues. They started in the bottom league, and they've since moved up a number of leagues because they had more resources to buy better players, have better equipment, have better trainers, et cetera. And their goal is to eventually get to the top league, the Premier League. And so recently, the Winklevoss twins actually just invested further in this Bitcoin soccer team to help accelerate this trajectory. And at River, we walk the walk. Over half of our own corporate treasury is in Bitcoin. And this has helped us in a number of ways. It's substantially grown the value of our treasury. We have more resources as a company. It's also diversified our treasury away from cash, and it helps insulate us from risks in the traditional banking system, which you might not think about day in and day out, but sometimes it does come in handy. There were about 5 banks that failed last year. So having a 24/7 liquid asset on your balance sheet that's completely decoupled from those risks can be compelling. And long term, because we obviously believe in its long-term success and growth, this will just end up creating long-term value for shareholders, as it has at MicroStrategy. So an interesting trend we've seen is that the old way for businesses to adopt Bitcoin, as I mentioned, was to you run an existing business or you sell something online and then you go, let me accept Bitcoin payments. That was kind of like the old early Bitcoin way of getting into Bitcoin as a business. We're seeing that actually getting flipped on its head. And businesses today are saying, well, Bitcoin for payments, I mean, that might be interesting. But actually what I'm really interested in is buying Bitcoin for my treasury. And then they start wondering, okay, should we do more with this thing? We have this Bitcoin in our treasury. Should we be using this for payments? Or should we be accepting Bitcoin payments? Since we already have it in our treasury, why not accept Bitcoin payments for goods or services? And while there isn't a ton of activity here yet, there's a pretty big opportunity. If you break payments down, if you break down global cross-border payments by category, pretty much everything is a rounding error in comparison to B2B payments. So B2B payments is basically all international payments. Is kind of one way to think about it. So you could imagine a future where if most companies in the world have Bitcoin on their treasury, it becomes sort of a interesting thing to ask, well, will they just start making international payments in Bitcoin, given that international wires can be pretty hairy sometimes. So this is just an interesting trend I think worth paying attention to. Another example of how this paradigm of treasury-first Bitcoin versus payments-first Bitcoin is really what is being adopted right now is what Square just rolled out a few days ago. So Square made it very easy. They launched this last week. They made it very easy for merchants who are Square merchants who accept, coffee shop accepts credit card payments with a Square terminal to automatically convert some of their revenues into Bitcoin. And what's interesting is what they didn't ship was the ability to accept Bitcoin payments. They shipped the ability to convert their dollar payments into Bitcoin. And I think that actually says a lot about where companies and business leaders are thinking right now as it relates to Bitcoin. It's really all about the balance sheet at the moment. Now, Bitcoin payments has been seeing a lot of advancements, though, in the technology that could make Bitcoin more and more suitable as this medium of exchange, as this payment technology. The Lightning Network, which last year's conference discussed a lot about, if you were here last year, we went very deep into the Lightning Network. But for those of you who aren't familiar with it, just to give you a high-level summary, the Bitcoin blockchain is kind of like the Federal Reserve. It's slow. It's for sending large amounts of money. The Lightning Network is like a decentralized version of Visa. It's for smaller and faster payments. And that's seen a lot of growth as well. In the 2 years between August 2021 and August 2023, we estimate that there was about a 1,200% increase in the number of monthly payments on the Lightning Network. We haven't yet run the data for this year, but we'll be launching another Lightning report, which we do annually at the end of this year as well, so stay tuned for that. But the number of small Bitcoin payments being used for various reasons, sometimes it's commerce, sometimes it's peer-to-peer, sometimes it's online gaming, it is seeing healthy growth, but the value of those transactions are typically pretty small. The Bitcoin blockchain is capped at how many transactions it can process a day. And the gray chart here shows the average number of transactions per day of the Bitcoin blockchain. And the gold shows the transactions per day of the Lightning Network. And the Lightning Network transaction numbers, by the way, they're our own estimate. They're a conservative floor. The number is actually probably higher. So the Lightning Network is really unlocking more transactions that can happen in Bitcoin at all. And the jury's still out about how big this is going to be. It's pretty exciting to see the growth. But I think really sort of one observation that we've had is while commerce with Bitcoin is a really cool idea, people still mostly want to use dollars for that. And so something interesting happening is that the Lightning Network is going to become multi-asset. You're going to be able to transact dollars on the Lightning Network as well. So that's another trend worth paying attention to. And if you want to learn more about the Lightning Network or some of the trends we're seeing, we have a report. Just Google River Lightning Report, and it'll probably be the first result. You can download it really easily. So what's the end goal with sort of all of this work happening on Bitcoin technologically? Like, why are we doing this? What's the point? Really, the end goal is that anyone who wants to, not everyone, but anyone who wants to, is able to move Bitcoin and take custody of it if they want, right? That's sort of an important feature of this asset to maintain its value. And so a lot of the work of scaling Bitcoin is to make that activity possible as the number of people who use Bitcoin increases. So there's all sorts of interesting work being done right now to unlock things like this in the future. And the cool thing about these is almost all of them require no changes to the Bitcoin protocol. There are all these layers built on top of Bitcoin so that you can experiment in a much less risky way off-chain, just like the Lightning Network, to figure out what else you can do with Bitcoin. And there's been a lot of progress in some of these ideas and developments. And so these are just some concepts and buzzwords you could say to pay attention to if you're interested in looking more into this. So how are these new projects doing this? What are they using? How does it not touch or change the Bitcoin blockchain? Well, when the Bitcoin blockchain has this programming language, it's very simple. It's called Bitcoin script. And while it's very simple, over the years, more and more people have realized there's more and more we can be doing with this thing that nobody had noticed before. And so that's really the big theme this year, is that there's been a lot of smart people paying more attention to this and realizing there's more that we can do with this Bitcoin script than we thought we could. And these explorations come down to how do we increase Bitcoin's scalability, utility, and privacy without making it more centralized over time. There's a Bitcoin script event happening in Austin right now. So if you want a list of like technical topics to Google, this is one. I'll publish the slides later so you guys can look it up. And changes to Bitcoin. Bitcoin is a very conservative project. Changes happen very slowly, and they should. One of the most recent changes to Bitcoin was called SegWit. And SegWit was shipped in 2017. It was a change to Bitcoin that made transactions less malleable. There were all these sort of like issues that Bitcoin transactions had if you wanted to use them for accounting and things like this. And SegWit addressed a lot of those issues. But it was actually only until this year that the usage of this change actually hit near 100%. And I say this is a good thing, actually. Bitcoin should move very slowly. And so it is sort of worth, this is just a property of the project worth understanding. And so 2024, to wrap it up, marks a new era in Bitcoin's existence. As an asset, institutional ownership of Bitcoin is now mainstream. That's really the takeaway. This year, I think, marks the first year where we can say with 100% certainty, institutional ownership of Bitcoin is normal. And the door is open. And the technology is also advancing. There's a lot of interest in Bitcoin as a technology, and Bitcoin script, and experimenting with future ways that we can use Bitcoin. The work on that needs to start now because it could take decades for any of this to even be realized. And so 2024, from both the economic perspective and both the technical perspective, is a foundational year for Bitcoin. And I'm really excited to see what happens next. That's it. Thank you.
All right, thank you so much, Alex. We are officially in the institutional era of Bitcoin. So exciting. Our next keynote is called Research and Development in Bitcoin with Korok Ray. He's an associate professor at Texas A&M University, where he has worked to advance Bitcoin education at the largest university in the United States. He taught the first ever Bitcoin class at Texas A&M, and he's dedicated to researching Bitcoin mining in Texas. He's a game theorist who studies decentralized incentive systems like Bitcoin, and this year he is launching principlesofbitcoin.com to teach Bitcoin from first principles online based on his university teaching. Welcome, Korok.
Thank you, Natalie. I feel like Taylor Swift, so that's great. So howdy, my name is Korok. I'm a professor at Texas A&M. Today I'm going to talk to you about Bitcoin R&D, the undiscovered country. I want to tell you a little bit about what I think is a beautiful future for Bitcoin. And to start that, actually, I want to start talking, let's first talk about the past. So I'm going to bring you back to 2007. I was an assistant professor at the University of Chicago, and I joined my dissertation advisor on the Council of Economic Advisors in the White House. And within a few months, one day we got a call from the West Wing, and the question was, how do we recapitalize the financial sector? And so we spent the next several months, which is an eternity in White House time, trying to figure that out. We talked to everybody under the sun, both academics, Wall Street, policymakers globally and domestically. And the truth is that we had no idea. That was the truth, and neither did anyone else. So we didn't really have a consensus because there was no consensus. We fought this debate internally with the Treasury Department for several months, and we were winning that fight. But at some point, the political winds turned, and we started losing that fight. So I think the lesson that I remember from that White House is that question from the West Wing. The answer is less important, but the problem was the question itself. I think it reflected a fatal conceit that essentially a small group and band of individuals with the best credentials and the best intentions can in fact fathom the infinite complexity of a market economy and design an intervention with no unintended consequences. I believe that Satoshi Nakamoto also understood the limits to human reason and the problems with central power and deliberately designed Bitcoin around this core principle of decentralization and distributed knowledge, which is with us today and something I'm going to discuss at length throughout the rest of my talk. So let me show you one of the chief features of Bitcoin, which is its value as a scarce asset. One of the geniuses of Bitcoin's design is that it really is digital scarcity for the first time. And so what I tried to do is I looked at the returns from holding Bitcoin at, say, a 5-year horizon, and I asked, well, what would be that return if you bought it at the highest possible price and sold it at the lowest possible price? And so that would be your lower bound of your payoff. That would be the worst you could do. And I looked at that for all possible horizons. And this is what it looks like. Okay? So what do we see? We see after about 3.25, 3.3 years, you will not lose money. After about 3.45 years, you will beat the market. After 3.5 years, you will beat Warren Buffett. And then beyond that, everything else is icing on the cake. Now, the past does not predict the future, right? And obviously, we don't know the future. But I'm an empirical economist. I'm a social scientist. We have to look at the facts. And so to me, this is the top 1,000 reasons to hold Bitcoin. If you forget everything else I say, at least remember this picture. And so this is, I think, the first time in the history of humankind where we see this kind of the value of scarcity illustrated in such a novel way. Okay, so in 2021, I held the first ever Bitcoin conference at a major university at Texas A&M. We had 35 speakers, 1,500 registrations. We had dozens of high-profile speakers like Ray Dalio, Tim Draper, the head of the Dallas Fed, and Michael Saylor, who gave our keynote. It was a big success. It was a lot of work, so sympathies for people who put on conferences. The next year, I did a smaller conference, an academic conference of 100 faculty, 100 submissions for papers, 20 faculty for a more academic investigation of Bitcoin. Now, I realized that my students weren't really understanding what was going on in these conferences, so I decided to teach the first ever Bitcoin class at a major university. I now teach 2 of them. I teach the Bitcoin protocol, which is a deep investigation of Bitcoin at the code base. And I teach an accounting and finance class on Bitcoin for a broader audience. Texas is Bitcoin country, if you have not been. Almost 20% of Bitcoins around the world are mined in Texas alone. So some of the biggest mines are within an hour of our backyard. And our lab on campus is exploring all the innovations in Bitcoin mining, trying to understand energy optimization and usage. But I'm not going to talk too much about mining. I could talk for hours about that. Instead, I want to focus on Bitcoin's R&D. And again, I want to look at the past and show you what one of our alums put together, a graphic explaining the 50-year genesis of Bitcoin in ideas. So this is 50 years of computer science, mathematics, economics that are all based on the technology that we know and love today. Bitcoin is not another social network or a dating app. Okay, it is real science with real technology behind it, and it goes back a long way. Bitcoin research, just like Bitcoin itself, is a global phenomenon. These are the institutions where all of the faculty wrote papers in just the last year. And so we need more people from the US, I'll tell you that. So this should show you that there's an ocean of knowledge in Bitcoin, in the research community, that I think people are just now beginning to discover. I spent almost most of April and May, up until most of March and April, reading about 300 of these papers. And I think one of the great untapped opportunities is to make some of this knowledge more publicly available. So I built this little mental model of where the research is and development on Bitcoin. So if I could make a slight simplification, imagine these 4 basic categories of Bitcoin, the 4 main pillars: cryptography, networking, transactions, and the blockchain. So in yellow here are academic papers in the last 10 years that have been and this is just a sample. And I've kind of positioned them. This is not completely scientific. It was my own judgment where to put this on which box. And I'm also going to show you where the developments are in green and the links between them in orange. And so this shows you that there is a lot of communication between the research side and the development side. And so this is actually inspiring for us for what I think can continue to happen with Bitcoin development. Now, Alex mentioned a little bit of this, and I'll continue to dive in. The mental model I think you should have is that the Bitcoin blockchain is the base layer. It's the orange boxes at the bottom. And the Lightning Network is a second layer on top of the base layer. I think a useful trick is imagine you walk into a bar, and you give your orders to the bartender. The bartender is writing down your orders, maybe giving you drinks, but he doesn't cash you out until the end of the night. And so that's what the Lightning Network is basically doing. It's doing a lot of these payments off-chain, which are recorded inside of what's called a payment channel. And it's only recording the closing of the bar tab at the end of the night. And so one thing that people have realized, I think, this last year is that even if you do this, the Lightning Network, which itself is an ingenious design, has one limit, which is that you're limited to you have to make a closing transaction for each channel, opening and close. And so bringing even 1 billion people on Bitcoin would be 1 billion transactions. And so let me tell you where I think the community is right now and the best solution to this, which is, again, Alex mentioned this. I'll go into more depth. This is what's called a Chaumian mint. Okay? And David Chaum was a famous cryptographer who came up with this idea. And this is now getting implemented, where you have multiple users, say Eva and Ethan, and the first step is they would, say, provide some of their property or assets to the mint. The mint would then sell that for Lightning. The mint would issue eCash, or electronic cash, which is essentially a paper version of Bitcoin, to the users, and then they would then use that to trade. Eva wants to sell a car to Ethan. Well, Ethan's got eCash. Eva takes it, and they can swap. Okay? Now, the mint interfaces with what's called a Lightning service provider, and that has a connection to the blockchain, and they can engage with transactions as they need to, Lightning transactions. Now, what if you have multiple mints? Well, you can do that. You could have Cashew as one mint on the left. A Fedi mint is another structure on the right. They are different mints, which each have their own different paper products. And what the question becomes, well, what happens if Ethan wants to sell a car to Fred? Well, Fred has Fcash, which is from his mint, gives that to Ethan. Ethan can then swap that with his mint to get eCash, which is useful to him. And the eMint needs to essentially do something with the Fcash. Well, it turns around, goes to his Lightning service provider, which can swap it for Lightning. And then the LSP can also then swap the Fcash for Lightning with the Fmint. And so these kinds of trades can happen in the future where the Lightning service provider or some other entity acts as essentially a clearinghouse for these different forms of paper versions of Bitcoin. Now, this might seem strange to you to have this structure, but I will say in the history of the United States, actually, before the Civil War, this is what banking was like. This is before we had the Federal Reserve. We had just a network of banks that would issue their own banknotes. The Andover Bank would issue bank dollars. There was no US dollar at the time. And the collateral of the time was gold. Alex would deposit gold to the Andover Bank and get banknotes that he would then use. Same thing with the Bedford Bank. And then there was a bank called the Suffolk Bank that would act as this intermediary whose purpose was to swap notes in between each of the smaller banks. So we have some historical precedent that this design has actually worked in the past. Of course, the Civil War changed everything when the government needed to fund the war, so I guess some things don't change. So then eventually the dollar became standardized, but before that there was about a 30-year period where we had essentially competitive issues of currencies, all backed by gold as the underlying asset. And I think that is a very natural vision for Bitcoin in the future. So back to this picture, we have a base layer of the blockchain, and we have above that a Lightning network, and then above that possibly a series of mints, where the Lightning network is not even necessarily your network for buying coffee. That can happen at the mint level, but the Lightning network is connecting the different mints together for global adoption of Bitcoin. OK. Let me try to give you some use cases that might be specifically useful for you as you walk down your Bitcoin journey. So imagine that your corporate treasury holds some Bitcoin. In order to spend that Bitcoin, you need to sign for that Bitcoin. One of the innovations that's been around in Bitcoin since inception is something called multi-signature, where you have multiple signatures in order to release the Bitcoin. So in this case, for example, suppose your CEO, CFO, and COO all have a signature, and you need a majority of them, say 2 of 3 of them, to sign for Bitcoin. This is actually a much more robust and safe way to transact because you're not locking up all of the responsibility in one person. But things can still happen. So let's suppose that 2 of these 3 people lose their keys. Then you're in trouble. Then that Bitcoin is hard to access because you need 2 of 3 to access it. Well, what you can do now is that your base case can be a 2 of 3 multi-sig. But now you could also have some built-in fail-safes. So you could say that after 30 days, that multi-sig could degrade to a 1 of 3 multi-sig, where now, let's say 2 of the keys are lost, then you can only need 1 person for the key to have the key to unlock the funds. Let's say all 3 of them die on a plane crash back from Vegas. OK, then your Bitcoin's lost. Well, you can build in another fail-safe that after 90 days, your chairman can have access to that Bitcoin on a 1 of 1 multi-sig. So this decision tree, which I just showed you, is kind of cool because it actually can be represented directly on the blockchain. There's a data structure now in Bitcoin called Taproot, which has been active since 2021. And it can replicate exactly that tree that I just drew. In fact, it can do a lot more. That tree can be 128 levels deep. And to tell you, that means that you can have 2 to the 128 branches and items in the tree, which is an enormous number. And so I'll tell you later why that's kind of an interesting problem to have. This is all available today. Let me give you a few examples of some technologies that are coming on the horizon with Bitcoin and some use cases that would be useful for you. I expect these to be in Bitcoin within the next year or two. So there's one idea that's been in the developer community called vaults. And the idea is that when Alice sends Bitcoin to Bob, it's a little, you could see it as a high-risk transaction because if she loses her key, then someone else could take her funds. Well, now with the vault, Alice could send her Bitcoin to the vault, and it would sit there, kind of like an escrow account, for some time, say a week. And if she feels like her Bitcoin's at risk, she can claw that back into her account within that week. If not, then that Bitcoin can just move over to its target. And so this is one example of a little bit of a fail-safe that gives you some more, and this will all be on the blockchain to use the native security of Bitcoin, which is the strongest in the world. Okay, here's another one. One of the most common transactions in the financial markets are repurchase transactions. These are called repos. These are used by banks in order to satisfy essentially their reserve requirements set by the Federal Reserve. And so banks interact with the financial markets. Let's say there's a pension fund. A bank needs some short-term money to meet its reserve requirements. It has some collateral, like a treasury bond. It uses that collateral for a short-term loan to the pension fund. And the next day, as soon as the next day, they reverse that transaction, where the bank pays interest on the short-term loan. It would be fully possible with some innovations in Bitcoin since 2021 to replicate this on the blockchain if you wanted. You could have essentially the data of the bond could be represented on chain, and you could use the Bitcoin as the medium of exchange. I think in the future, we'd actually use the Bitcoin as the collateral itself. Okay. Here's another, I think, idea for some use cases in the corporate environment that might be interesting. I think, again, imagine you have a group of institutions, you could say banks or corporations, that that transact a lot with each other, but they don't want to have these transactions hit the blockchain each time. Well, what will be possible soon is something called a payment pool or a coin pool. In this case, 6 different institutions can share a Bitcoin output together, and they can all contribute some amount of balances to the pool. And they can trade within the pool without making on-chain transactions. So that repo that I just said, if 2 different banks want to swap Bitcoin, they can do it in the payment pool. Bank D to Bank C can make a trade. That doesn't have any problems. And if any of them want to exit the pool, they can extract the funds, and they can just make an on-chain transaction. 2 Bitcoin from A goes to some third party, and then we'll reformulate the pool at a later date. So these are some of the, I think, the best ideas today that are in the Bitcoin ecosystem that all will hopefully spur adoption and make Bitcoin more usable for institutions primarily and individuals as well. Okay. Okay, now let me tell you about what I feel is the undiscovered country. Okay, so this part is going to be fun. I believe that, and this is my conviction, I'm making an argument, this is not a fact, but my opinion here is that the ultimate use case of Bitcoin in, say, 100 or 200 or 500 years will not be humans but machines. And the reason I say this is that if any of you have interacted with Bitcoin, I think this was more the case maybe when Bitcoin started, less the case every year. It is a little bit tricky because you have to deal with keys and with QR codes and large random numbers, and it might seem a little unintuitive for human users. All of this is natural for machines. And as we are at the wave of massive technological progress, I believe the biggest opportunity will be deep integration between machines and the entire Bitcoin network at different levels. Okay. So I'm going to include just a few. I'll try to keep this pretty understandable, not too technical, but I don't want to sound like Kathy Wood, so I want to make sure that I do have some substance. Okay. So what we can do now with Bitcoin, we can do machine-to-machine payments. This is possible today over the Lightning Network. Okay, so imagine you're driving your Tesla, or the Tesla's driving itself on the highway. Okay, the machine could easily pay its tolls for you. And we kind of have a version of that technology today with e-tag. And that's, or easy tags, as we say, or Texas tags in Texas. That would be what I would call vehicle to infrastructure congestion pricing, or congestion payments. So that's a natural next step. But I think the next step beyond that are vehicle-to-vehicle payments. How many times have you been driving on a one-way road stuck behind an 18-wheeler and you just wish you could just pay him a little bit of money to pull over? Okay? In the future, your car will bargain with that 18-wheeler for you, and it will all happen autonomously. Okay? So vehicle-to-vehicle payments, I think, are definitely in the cards. Now, I want to tell you a little bit about machine-to-machine payments today and how they're operating as a prototype of what can happen in the future. So the Federal Communications Commission owns and has always owned all the airwaves above the United States. What they do is they auction off these airwaves to the wireless companies, who then operate these for mobile broadband. Wireless companies participate in these auctions. And traditionally, they used to auction the states and the regions off one at a time. So Sprint would bid $1 billion for California, maybe another $1 billion for Nevada. But what the wireless companies realize is that sometimes the combination is worth more than the sum of the parts. And so maybe if you can get both, you'd be willing to pay $3 billion. So this is actually then innovated, and this created a new kind of auction called a combinatorial auction. It's combinatorial because you're looking at combinations of things, not just individual units. And if you have 50 states, you have actually 2 to the 50 possible combinations. That's a very large state space. It's hard for us to imagine things that big, but it's easy for computers to do. And so today, in these auctions, in this last auction, when they auctioned off for this last round, computers were the ones that were bidding in these auctions and trading afterwards. So we already have some evidence that this is happening today, and I believe this idea will carry forward into the future. There's a problem in computer science that's called secure multi-party computation. We're all IT people, so hopefully this won't be too unfamiliar. The basic idea is you have a group of servers that are performing some computation together. So imagine that today that might be done by AWS, a centralized model. But in the future, as the GPUs increase in size and scale, we're going to have different clusters, and maybe they're doing some AI computations as a group. And you want to make sure that the individual units, the individual servers, don't abort the computation or fall offline. So there's a lot of cryptography and computer science behind this. And it turns out in the last 6 months, this technology is now available on Bitcoin. And the basic idea is that you can do the computation off-chain, and all you need to do is to have some representation of the computation on-chain that you use for dispute resolution. And so the analogy here is that think of the dispute resolution on-chain as the court in a courtroom, and the off-chain is the behavior in the streets. And so when we all know that there are laws, traffic laws and speeding rules, but very few of us actually end up in court. We go there if there's actually a dispute to resolve, but the laws themselves are enough to enforce behavior in the real world. And I think this is actually a deep idea that is just at the beginning of its implementation in Bitcoin. So let me identify what I think are 3 innovations that's happening right now in the economy, in the technological economy, and that are going to affect Bitcoin in a big way. The first is large transactional complexity, which is coming from Taproot. That was that binary tree that I showed you with all those different levels. That can be almost infinitely large. And if you have trees on top of trees, you could represent an enormous amount of data, essentially, onto the Bitcoin blockchain in a very, very concise way, since only the hash of that tree is what gets imprinted onto the chain. The second is these innovations on secure multi-party computation called BitVM. We are just at the beginning of this journey. People are now asking things like, well, how do you play chess or poker on Bitcoin if you had really high stakes, like $1 million bets? I don't think though we're in Vegas, I don't think those are going to be the end uses of this computation. But just like artificial intelligence, figuring out how these things work in finite, well-defined games is going to open up all kinds of opportunities for the future. And the final major transformation in artificial intelligence is deep neural networks. And integrating this, I think, with Bitcoin is going to be the true undiscovered country. So one example, I think, is we could imagine autonomous trade where agents are trading with each other. They are avatars representing at a high level your own wishes, either as a corporation or an individual. And they're bargaining in very high-dimensional spaces for packages of all kinds of different items. Using, right now, the best technology today is multi-agent reinforcement learning, but that'll change over time. The communication may be in machine language, or probably in the future, maybe even in natural language. Another example, trustless auctions. Okay, the combinatorial auctions I showed you with the FCC. In that case, we already have agents that are bidding in the auctions. We can now have agents that design the auctions. So in the digital economy, you could imagine a creator who's creating a digital good needs to interface with all these different vendors. All of that contracting, as well as the payment, is happening through these auctions. Industrial procurement. Imagine you are building a skyscraper, and you have a network of vendors who are providing bids. And you could get individual bids, or maybe some of the vendors can provide spray foam insulation as well as your HVAC as a discount. And there are a large number of combinations that could work. Or you're a robotics company that's building a robot with thousands of inputs. Okay? And so those are examples where I think the computational complexity of machines is really going to have a big edge. My hope is that we could hopefully unemploy the ultimate middleman, investment bankers, and move IPOs and the equity markets over in some level towards some manifestation into Bitcoin. I don't know if you realize, but outer space is a junkyard. So this is a picture from NASA of all the orbital space debris. The problem is that we have a classic tragedy of the commons. So the first step is we have to figure out as a society a way to assign property rights in space. But once we do that, we could imagine a future where we have essentially space, either countries and companies that own pieces of space and offer rights of passage to other private players. And they can do this in transacting and negotiating in Bitcoin. Perhaps what I think is the biggest idea in this space, and probably the most unexplored, is what are called prediction markets. A prediction market is a market that lets you express any trade on any event at any point in the future. It's a very general class of markets. And so we know from economics that markets are very useful for facilitating trade between individuals. If you think about the story of American capitalism, it is closely connected to the story of the equity markets and the amount of wealth that we've been able to create through the equity markets. And part of that is being able to essentially take a bet on a young company that needs financing. Some of the benefits of doing that through, say, the equity markets is that it forces information disclosure for companies to provide information to the marketplace through that process of price discovery, and it enforces some accountability. So imagine if you could bet on, say, something like, would a politician have to adhere to their campaign promises? Just having that price out there would have possibly massive implications for the political system alone. We could also create all kinds of new markets that don't yet exist. The equity markets have been around for a while, but the bond markets are 10 times as large, and they're largely offline and analog. So let's forget about moving them to be just to be digital, but let's move them into some version of onto Bitcoin, along with all kinds of new markets. So imagine you are a homeowner in New Orleans, and you can't get homeowners insurance because the price of insurance is too high, or maybe the insurance companies are not insuring in New Orleans anymore after the last flood. Instead, you can place a bet on essentially a prediction market for if there will be a flood that month. Most of the time, you won't have it. Maybe once every few years, you will get a flood, and you'll get a payout by being on the other side of that bet. That essentially serves the function as an insurance contract in a place where it wasn't available before. Economists are now talking about building out a future forward energy market, a fully forward energy market where you could buy and sell energy at any point in the future. A prediction market may be one way to implement that. And what's probably most passionate to me is the implications for talent. Imagine that there was a marketplace for observing what does the market believe on whether we will have 10% or 10x the number of software engineers in 10 years or 20 years. That can have massive benefits to the young student in college who wants to decide on what to major in. And you could imagine that there would be companies that could serve to essentially equitize that human capital. And so you could take bets on people, and those people could finance their education and their new companies in ways that were not possible before. Why is all of this better on Bitcoin than anything else? For a few reasons. There is fast and final settlement on Bitcoin. Okay? So machines are not going to be talking to each other on the Visa network. Right? They're not going to wait 30 days to get payment. It's not going to be on a credit network. It's probably going to be on some Lightning or some iteration. The computation is trustless, as we're going to need in the digital economy, where computers essentially must adopt the worst assumption, the worst case assumption, because that is the key to ensuring security. Transactions can be extremely complex, as I've discussed, and it's essential that the base layer is secure. If you're placing a bet on the price of electricity in 20 years, you don't want to have to worry about inflation. And so you want to be using the most secure asset that exists, which is Bitcoin. So we're not there yet, but I think that I can see a path for us to get here. A few things that I think we need on the research side: we will need easier scripting to be able to write easier scripts onto Bitcoin. That's happening now. We still will need simple verification on chain. It still needs some way to go. And I think we'll need more innovations on layer 2s. We have a really good network for payments, but we need really a layer 2 network or adaptations to Lightning for contracts. In the real business world, the actual payment itself is one part of the process. The contracting for it is probably a bigger mess. So in our lab in Texas A&M, we have some early preliminary results. We have a GPU that we're running. We're calling him Hal, both as a reference to the space movie as well as to honor Hal Finney, the recipient of the first Bitcoin transaction. Hal is autonomously trying to write his own Bitcoin transaction in a taproot multisig tree. So we'll be excited once we can push this to the blockchain. So if you find these ideas compelling, I'm going to launch something called the Bitcoin Research Institute, which is really to connect these two worlds of research and development and really bring Bitcoin together with a lot of the major advances in AI. The truth is, right now, they're still separate, and I think more collaboration can and definitely will help. I expect to have greater connection between the academy and Bitcoin development. There is an army of researchers and faculty out there. We need the best minds onto Bitcoin to make all of this future a reality. And I would like to help build out the talent pipeline so that the next generation of students are excited and interested in working on Bitcoin. The ideas that I've presented here are not my own. They are actually an example of 50 years of economics. These are a half dozen Nobel laureates who formulated many of the original ideas that led to some of my remarks here. And so I believe this is one more example of research and development coming together. And I expect and hope for this to continue in the future. So let me just close with one final remark. I think this vision that I have painted for you of Bitcoin combined with machine intelligence, I think underneath that there's a deep and somewhat poetic irony, which is that human beings will need Bitcoin in order to secure our highest economic freedom in the future, for us and for our posterity. Thank you, and please stay in touch. Principles of Bitcoin is my website. Thank you.
Thank you so much, Korok. There's really nothing like an amazing professor or teacher, right? It can be life-changing. And I speak for myself, but also so many people when I say the best teacher in Bitcoin is none other than Executive Chairman of MicroStrategy, Michael Saylor. I have learned so much from him. He is an American entrepreneur, executive, inventor, author, and philanthropist. He co-founded MicroStrategy and previously served as the company's CEO for 33 years, from 1989 to 2022, and he is also the chairman of the board of directors. He is one of the leading advocates for Bitcoin around the world. Give it up for the Michael Saylor.
Well, actually, one of the more fun parts of my job is I get to work with the engineers at MicroStrategy, and we've got a few projects built on Bitcoin we've been working on. Last year, I had the opportunity to share with some of you our Bitcoin Rewards and Lightning project. This year, I've got something a little bit different. It's called Bitcoin Security. Bitcoin has a lot of use cases. I mean, the use case that I talk about a lot is store of value, and I think that's obviously worth quite a lot to the civilization. A use case that we're going to talk about with David Marcus at the end of the day is medium of exchange, and that's a very exciting session, and there's a lot of discussion about Bitcoin as a transactional settlement technology. But there's a third value proposition for Bitcoin, which I'm also very interested in, and it's a system of trust. You have this immutable, unstoppable, immortal, decentralized network, and it's storing data, and it's providing integrity, and it's executing transactions. And of course, the first grand idea was, first people thought, we'll move money without a trusted counterparty. And then they thought, well, I guess we could just keep the money in cyberspace forever without a trusted counterparty. And that was the medium of exchange and the store of value. But the third thought is, well, if there's something that I trust more than I trust any particular counterparty, maybe I can leverage that system of trust. And that was really the genesis of this next project. And I'm going to introduce it, and then Cezary, our head of engineering, is going to show it off. It's based upon this idea of decentralized identity. For those of you who, who use Instagram or YouTube or WhatsApp or maybe X, one of the frustrations has been, how can you trust anything that's posted? For a long time, I have a fake Michael Saylor channel that spins up every 15 minutes on YouTube. And the way that you know it's not me is I'm offering to give you 2 ETH for every ETH you send me. And that's definitely not me. But also, I'm offering to give you Bitcoin. I'll give you 2 Bitcoin for every 1 Bitcoin you send me. And it's very frustrating because I know it's not me, and a lot of people know it's not me, but some people seem to think it's me because I get a lot of emails, sometimes saying, I got tricked by that. And the solution oftentimes is a very laborious verification process. It may be expensive. It costs like $1,000 a month for a gold check from X Twitter. And it's a proprietary gold check because you can't take it to WhatsApp or YouTube, or your Microsoft environment. And of course, Meta's got their own little blue check thing, and then Google's got a different black check thing, and they don't work that well, and they're all very proprietary. And that's one of the challenges of digital identity today. You end up with a centralized identity, and maybe you're logging in with Facebook, or you're logging in with Apple, or you're logging in with Google, and you start thinking, well, what happens if one of those websites or one of those systems gets hacked? Or what if it goes down? Or what if one government somewhere decides to send a court order to one of those, maybe the Australian government sends a court order to one of these things and they take you off the network. So it's a lot of anxiety, it's very fragile, it's very brittle, it's very expensive, and it just doesn't work that well, and I think that's been a frustration of a lot of people. You end up with all sorts of challenges with these frameworks. How do you verify who you are? Is the data private? Do you really want some central organization to know everything you logged into? How do they interoperate? And that caused us to start thinking, wouldn't it be great if instead of a blue check or a green check or a gold check or a black check, what if there's an orange check? What if there was a cyber passport that you got once in your life and it was based on public-private key cryptography that you could take with you? If I paid a nickel for it or a penny for it, and it was anchored into an immutable, unstoppable, incorruptible network, that could be a global standard as opposed to some local nation-state standard. And then maybe I would log into that system using my private key and public key pair. And we saw a little bit of this pop up. One example is in the Nostr environment, when people started using public-private key pairs to log into various Nostr-compatible clients. And of course, we saw another example of this in Bitcoin, where the public-private key pair is how I move money around. And the most famous example or question here has been, well, will Satoshi ever prove they exist by digitally signing a message with their private key? And of course, we know that's possible in the Bitcoin environment, and it's worth, in this particular case, $65 billion to do it. But we haven't really levered this idea of public-private key cryptography anchored into a proof-of-work network for most commercial applications. And MicroStrategy thought maybe we could approach this idea of decentralized identity combined with Bitcoin and then create an enterprise application for it. So that was the genesis of this Orange project. And what you can see is on one side, you've got the decentralized identity, and that's the public-private key pair. On the other side, you've got the Bitcoin network, which is your system of record, which is really just a global fault-tolerant computer system controlled by no government, no corporation, no person. Our vision is to provide an internet-native, decentralized digital identity backed by Bitcoin. So we want to use the open standard of DID, and then we want to use the open standard of Bitcoin, and put the two together. And of course, why would you use Bitcoin? Well, it is fault-tolerant. It is censorship-resistant. It does use the most advanced cryptography. It's a lot better than most people's password managers and these federated systems. It's distributed. But of course, we come back to the issue of why is Bitcoin successful? It's open, permissionless, egalitarian. That's why it's successful. So an open standard means it could appeal to every country, and it could appeal to every company. There's no way that Apple wants to trust Google. There's no way that Google wants to trust Meta. There's no way that Americans will trust a Chinese company. There's no way the Chinese will trust an American company, right? And so how do you build a system for millions of counterparties that maybe don't trust each other, and how do you make it open? And of course, the beauty of Bitcoin is there's been so much development on public-private key cryptography. In the Bitcoin system, people spend obsessive amounts of time thinking about, seed phrases and seed phrase recovery and public-private key pair, and then multi-signature and signing devices. Because you're going to move a lot of money around, that's important. Well, what if we could leverage all that knowledge and all that research, but use it in order to fight cyber hacking and phishing scams and counterfeiting, and plug it right into an enterprise system? So, what are DIDs? you know, a unique identifier. You know, users control their own keys. You've got privacy, and you've got decentralized verification. You put the two together, and that's something really special, the DID plus the key pair. So what we're proposing is an open standard. It's DID:BTC. It's open and compliant with decentralized identifiers. It's simple, it's secure, it's extensible, and it's efficient. What's really exciting about this is you can integrate with this at the layer 2. So this is an open protocol to the world. Anybody could just work with this protocol and build their own stack of enterprise apps or retail apps or the like. But it's also interesting because it's extremely efficient. You could burn up to 10,000 of these identifiers in a single Bitcoin transaction. So imagine doing one off-peak transaction, and then you've captured or created 10,000 orange checks. And of course, they're good. To say they're good for life is maybe an understatement. I mean, they're good for lifetimes, right? Once you've created this, maybe it's good for 100 years or hundreds of years. So it's kind of a cool idea. It's a lot better idea for identity than I pay 5 different big tech companies $8 a month or $100 a month or $1 a month for the rest of my life in order to keep my verification check. This one you can take with you. The way we've integrated this is we've got an enterprise version. It's almost like there's a custodial implementation and a non-custodial implementation. And there's sort of, you can self-custody your ID and take it with you, and you can own it yourself. Or a company could actually issue this ID very quickly to every single employee. So maybe your company issues 9,000 of these orange checks, and then the company can manage the key pairs. And if a person's no longer an employee, then maybe that key pair is revoked. But if you wanted a retail or an individual identity, you could have that as well. And I guess in the future, you might even get to a multi-sig situation, which would be very interesting for this. The goal, of course, is let people to sign messages, to sign documents, to prove their identity, and to integrate this into all sorts of corporate systems. And so in order to show you our first implementation of that protocol, I want to ask Cezary to come to the stage, and he's going to introduce the first product we built on it, which we call MicroStrategy Orange.
Thank you, Michael. So Michael presented a very compelling case for why we need decentralized identity and DIDs, decentralized identifiers. He made an even more compelling case why it makes sense to anchor digital identity into the Bitcoin blockchain, protected by the strength and the security of the Bitcoin network. And then he introduced a specification that we open sourced today. The first draft of the specification is available on the MicroStrategy GitHub today for how you actually do that. How do you create a decentralized identifier anchored into Bitcoin? And then he introduced this idea, well, now that we have the foundation, we can start building application platforms for consumer applications and for enterprise applications. And being an enterprise company, we've done exactly that. So today, I'd like to introduce MicroStrategy in Orange, which is an enterprise platform for building decentralized identity applications on the Bitcoin blockchain. The platform consists of 3 fundamental pieces. At the heart of it is a service cloud-hosted that allows you to issue those identifiers to your users in your organization. It also allows you to deploy applications, sort of prepackaged out-of-the-box applications that run on the MicroStrategy Orange platform. The Orange SDK allows you to take the same capabilities and integrate them into your own applications, into your own systems, into your own services. And like I said, the Orange apps are what's going to be sort of prepackaged point solutions that address specific digital identity challenges. And now I'd like to introduce the first Orange application that runs on the MicroStrategy Orange platform that addresses a use case that I think all of us can sympathize with. Despite the explosion in social networks and instant messaging, email remains the primary medium for business-to-business and business-to-consumer communication, with 350 billion emails sent every single day. Less than half of those emails are considered spam, and more than 1% are actively malicious. That's more than 3 billion phishing emails every single day. And those phishing emails are successful. Some 16% of all data breach incidents in organizations today can be traced down to a phishing email attack. Email security has been very, very slow to sort of evolve. There are standards that are slowly gaining adoption, standards like DKIM, which is the domain key identified mail, which are beginning to gain sort of good traction and provide integrity of the email, so you know the content has been modified. But email still suffers from one very fundamental challenge. Can you trust the identity of the person who claims to have sent it? The person's whose name and the domain address and phone number is at the bottom of an email. Interestingly enough, the solution to this problem is very well known and understood. Email needs digital signatures. Ironically, a standard that enables email to get digital signatures has existed for almost 30 years. It's S-MIME, Secure MIME. Yet it remains a very niche solution. Accurate data to sort of identify how much market share S-MIME has and what percentage of email is signed is very hard to come by. But it is understood that it's less than 1/10 of 1%. Why is it that it is so poorly adopted? Well, it comes to the fact that S-MIME sort of uses digital certificates to represent digital identity. Anyone who has been involved with deploying or rolling out S-MIME in an organization will tell you that procuring, managing, distributing, installing digital certificates is an absolute nightmare. Interestingly enough, at MicroStrategy several years ago, we rolled out a pilot of S-MIME just to our executive team, just to the CXOs. And we abandoned the project after only a few months without sort of extending the pilot to the whole organization, because we realized just how expensive and burdensome it would be to not only deploy it, but actually maintain it. In our estimate, rolling out S-MIME to an organization with 10,000 users might take up to 10,000 hours if you factor in all of the training and the ongoing support costs. So there is a better way. Orange for Outlook solves exactly that problem. It is, think of it as an orange check for your email, if you will. It brings the power of digital signatures to email. We focused on solving the two problems that plague S-MIME. First is enterprise deployment. How can we make it easy? Well, we can deploy with Orange for Outlook. We can deploy digital identities. Apologize, the clicker seems to have a mind of its own. With Orange for Outlook, we can deploy digital identities to 10,000 users in a matter of hours. That's because it does not rely on digital certificates. It relies on DIDs. We've also streamlined user experience to minimize those training costs and the training time. let me now sort of show you what that looks like in practice. We're going to start with sort of the administrative experience of how do we actually provision this in a corporation. There's two prerequisites which I won't cover here. The first one is, well, obviously you need your Office 365 administrators to actually push the Orange for Outlook add-in to all of your users. Second step is sort of a simple step of connecting Orange to your user directory. We do this all the time on the analytics side of a business. It simply requires putting in some certificates and sort of credentials to allow you to connect to your user directory. Once you're actually connected, once you've connected Orange to your Active Directory, you can now start issuing digital identities to your users. And it's really as simple as identifying the set of users you want to issue digital identities. You could do it manually, but in practice, you're going to do it by just importing users from the directory in bulk. And then in one single click, you can send every one of them an invitation to create their digital identity. This is also where you're going to manage existing identities. Obvious scenarios that we cover would be revoking an identity, for example, when an employee leaves your organization. Another use case is keys of a particular individual could get compromised, or the individual might simply forget the passphrase and is unable to deploy sort of their or transfer their identity to another system, and you want to be able to rotate their private and public keys, but without changing their decentralized identifier. All of that you could do from the administration portal. Now let's look at the onboarding experience. Onboarding is as simple as accepting an onboarding and invitation email. Now, of course, you can think, well, just that invitation email is an attack vector in itself. Of course, the invitation email is itself signed with MicroStrategy Orange, with obviously MicroStrategy's decentralized identifier. So once you've established that that email is genuine, you accept the invitation, and at that point, we're going to generate you your unique decentralized identifier and a public and private key pair. And we're going to send that decentralized identifier and the public key to the Orange server to be inscribed on the Bitcoin blockchain. From that point onward, you are ready to start sending signed, Orange-signed emails. And of course, the experience for the consumer is, for the sort of users of Outlook, is exactly as it was before. They simply author their email, but you will note every single email that they author will now be Orange signed. Now, you might wonder, what exactly does the signature include? Much like with the DKIM standard, where including in the signature the subject of the email, the body of the email, attachments, and additional metadata. So that's it. Send the email, and it's done. When you receive the email, as soon as you activate the Orange plugin, you can see if the email includes a digital signature, you instantly get a confirmation. Oh, look, looks like Mike sent me an email. Let's see what it says. Can you guys send me back any Bitcoin we're not using in development? We'll add it to our treasury, send it to this address. Do it today so we can include it in our next filing. Sure, Mike, I'll get on that right after this keynote. Oh, wait a second. Message is not signed with Orange. You know what? On second thought, I think I'll keep the Bitcoin for now. You get the idea, right? With Orange for Outlook, we've added one more layer of defense, sort of the final frontier of email security, knowing and being able to trust that the email received comes from the person that says they are the ones who sent it. So let's kind of look briefly what happens under the covers. Again, the user composes the email as they normally would. And then as soon as they click on send, we will hash the email content. Like I said, we include the subject, the body, attachments, and additional metadata. And then we sign that hash with the sender's private key. And we include that digital signature, which we call the Orange signature, in the headers of the email message. There's two important things that we should take note of here. Because we're just including the signature as a standard email header, the emails remain readable by any email client, and they can be relayed by any email relay and service. So we've not in any way restricted or changed the format of the email. So it's like the Orange for Outlook signed emails are sort of accessible and consumable by the whole entire email ecosystem. And this is also why we didn't take the final step of encrypting the email. We're just signing it. Because as soon as you encrypt it, now you're kind of stuck with a problem of how do I decrypt it? I need the Orange for Outlook plugin. It's a use case that we might add for sort of closed loop ecosystems. But we thought that just signing the email with the identity of the author and proving the integrity of the email would be enough. Well, you can imagine what happens when you receive such an email. We will extract the identifier and the signature from the email headers. We will then use the identifier to locate the sender's public key using the Orange check server, ultimately from the Bitcoin blockchain. And then we will verify the signature. We are going to effectively decrypt the signature with a public key. That gives us the hash of the content. We're going to hash the content that we received, compare them. If that checks out, we know that the message has not been tampered with, and it's been sent by the person who owns the private keys, the person who owns the identity. So this is just the first application, right? It's a solution to a very specific problem that sort of plagues us in this day and age. But we see a huge opportunity, and this is just the beginning. Imagine any Bitcoin wallet, custodial, non-custodial. The obvious thing is every Bitcoin wallet out there should incorporate the capability of creating a Bitcoin-based digital identity. Many messaging platforms suffer from the same challenge that email does. When you get a text message, how do you know the person who sent you the text message? All you know is their phone number. Maybe it's your mom sending you a text message from a number you don't recognize saying, hey, can you send me a few extra bucks? You know, I'm stuck without my wallet. So obviously, we would want to include sort of an orange check for these different messaging platforms. Social media platforms, Michael already covered this, right? In addition to the blue check and the gold check and the black check and whatever check, if there was a universal orange check that traveled with you and could prove your identity across all the different social media networks and email and messaging. And you can imagine a lot of different applications that integrate digital identity into the authentication authorization process in e-commerce apps and fintech apps and enterprise applications. And the other opportunity we see and we want to pursue is integrating the digital identity based on Bitcoin with this bigger verifiable credential ecosystem, which sort of opens up another sort of large number of very interesting use cases where I can now credential my identity anchored to Bitcoin with a university degree, with a course certification issued by a hyperscaler, with your medical records and whatnot, present those, and then have those verified sort of all in a decentralized way, but with the ultimate identity living and being anchored to the Bitcoin blockchain. So to recap, today MicroStrategy introduced a new specification for how to anchor a decentralized identity into the Bitcoin blockchain. And we'd love you to, again, the specifications are available today. It will be added to the registry of all the DID specifications in a matter of days. Today we also, and we'd love you to start building applications. If you want to sort of work at that layer, by all means. Also, you can partner with us on refining and updating the specification. When we launch MicroStrategy Orange later this year, we would love for you to start integrating Orange capabilities directly with your applications, with your services, or deploy Orange in your organization in the form of Orange for Outlook. And finally, and most importantly, partner with us. We'd love to partner you. Again, if you're interested in building directly on the low-level specification, if you're interested in partnering with us to build Orange into a solution that you're working on, whether it's any of the use cases that I've mentioned or a new use case, we'd love to hear from you. You can reach out to Michael, to myself, and again, we'd love to partner with you. If you want to learn more about Orange, we have a booth just outside this door where we have product owners, product managers, architects, and engineers, including the architect who built the BTC specification, and they'll be, I'm sure, very happy to share with you more of what we've done, what we plan to do next, and the bigger vision. So thank you so much. Enjoy the rest of the conference.
Thank you so much, Cezary. Fun fact, he has been with MicroStrategy for 25 years. There are so many people with the company that have been with MicroStrategy for decades, and he's also from my home country, Poland. So our next speaker is Mike Germano. He is an award-winning media and marketing pioneer, currently serving as the president of Bitcoin Magazine. He was formerly chief digital officer at Vice Media, leading its digital growth into becoming a global household name. He's also co-founder of Carrot, the first social media agency, and he worked with top brands like Netflix, Rolex, NFL, Red Bull, and Ferrari, shaping the digital advertising landscape. Welcome, Mike.
All right. Hello, everybody. Thank you for being willing to sit in and listen to my talk. I appreciate that, for those of you who are still sitting here. Once again, thank you, everyone from MicroStrategy, for giving us an opportunity to come up here and talk a little bit about Bitcoin. Wanted to start off by saying, once again, Bitcoin Magazine, a brand hopefully you've heard of. We're part of BTC Inc. And as you can see here by the collage of brands, we use the word Bitcoin a lot in everything that we do. So not just our Bitcoin conference in Amsterdam in Asia, or the Bitcoin halving recently, which we did a live stream of the Bitcoin halving. For those of you who know what it is, we've been doing that for a couple of years now. We broke down, we had over 250,000 people tune in for our live stream to watch that. We counted down the 21 moments, obviously, of what happened in this epoch, everything from the ETF to FTX. The #1 spot went to El Salvador. The #2 spot, unfortunately, went to MicroStrategy and Michael Saylor. So technically, there is a second best because that's what you guys were ranked. But once again, we've owned everything from Bitcoin Black Friday. Now, the funny thing is our Bitcoin-themed music concert series called Sound Money, ironically, is our least moneymaker of everything we've done. So a bad investment. So I recommend, maybe we're not there yet. So, real quick, once again, Bitcoin Magazine, we started in 2012 when Bitcoin price was $5.15. So it's a bad investment to actually spend your Bitcoin buying our magazine, but hopefully it taught you a lot and made you become the fan that you were. We ran our first Bitcoin conference in 2019. That's behind there's a Bank of America that's being built. I think those are the two happiest people at our conference. We had less than 2,000 people. Now flash forward the Bitcoin conference. Not only are we the largest in the industry, we're one of the biggest in mainstream media. We have the biggest names, everyone from Aaron Rodgers, coming in, who was great, to obviously the president of El Salvador making an announcement of Bitcoin legal tender. Jack Dorsey saying, hey, maybe I should go work on Bitcoin now full-time and leave Twitter. So really all the iconic moments, the biggest things that happen on the stage in Bitcoin happen at our conference, the Bitcoin conference. Not something named after coin, not something named after blockchain, the Bitcoin conference. And I think that's important. Also, I think the first time that Michael Saylor spoke at a Bitcoin conference was at our conference, so we like to show that off. This was the introduction. He got the legendary introduction from Max Kaiser. So the type of energy we bring. So once again, we were happy you came on our stage, and thank you for inviting us to yours. So real quick, you've heard a lot of really smart people today go through everything from what's technologically happening to what the money that's happening. And what I personally believe is the biggest thing that no one's talking about, that people don't give enough credit towards, is the open source brand that is the Bitcoin brand. For those of you, once again, a lot of enterprise people here, you know the value of brands. You know how much your company spends on marketing and how much that's built out. You know how much your marketing department gets mad when you misspell something, or who's going to actually use it, or your partners. And to think that this is not only the largest open source brand, the most successful open source brand in the entire world, the most valuable open source brand in the entire world. Real quick, Satoshi, who built Bitcoin in the white paper, This was the original logo. Think about this. The person who spent all that time building something so beautiful said, this is the logo we're going to use. And I think to myself that if this was currently the Bitcoin logo, I don't think it would be as successful as it is today. I mean, I don't think it would have that dominance. I'm willing to say that maybe Bitcoin wouldn't have made it. But luckily, in less than 2 years, a designer worked on, they decided to vote on it. So when we talk about 51% attacks, there was literally a 51% attack on the logo. And all of a sudden, they said, this logo is atrocious. And they made a new logo. So when we think about an open source design, when we think about an open source brand identity, 51% of the people, only 177 votes, picked this beautiful logo. The beautiful logo that we all know today. I mean, look, this stage is lit up orange. You know, we all know the color that was created. It wasn't gold. It wasn't trying to be gold. Picked orange. It had a open source font, beautifully done. Capital B, and then it has a 14% tilt, which I've read the explanation for the 14% tilt like 9 times. I still don't understand it. So if someone's really good at math, it's like really important. It's really mathematical. It's really Bitcoin-y, but I have no idea. I can't explain it. But once again, Phil Wilson designs this. He says, hey, community, here you go. Thank you. Use it however you want. Well, when we think about, we love to hear about the security budgets with Bitcoin mining fees, and we love to hear about all the investments people make in open source development. No one's making investment into the marketing. There's not been a penny in marketing. For any marketer, this is your worst nightmare. Your marketing budget is $0. But guess what? We're talking about permissionless marketing. We're talking about a group of people that decided, hey, I'm going to sit there and wear this with a badge of honor, and I'm going to use it to market. I'm going to do whatever I want to do with it. I'm going to do it where I think that brand should be. I mean, I love this. The top left corner is a gentleman who climbed up Mount Everest and brought with him in his rucksack, climbing up the Everest, the pinnacle of human achievement, brought the Bitcoin logo on an American flag. That's pretty cool. I mean, I know Visa's everywhere you want to be, but they're not on top of Everest, I'll tell you that. No one is climbing up there and bringing it up. You know, you look at the bottom and you see the Bitcoin communities that are sprouting up all around the world. They're using the Bitcoin logo for their city, whether that's, the Charlotte or Austin or Tampa Bay. It gives them a creativity outlet to sit there and be able to build that out. It's like a biker gang of nerds talking about inflation, just kind of going around wearing their badges on them. And people who spend their own money because they love this so much that they even take out billboards calling Bitcoin the honey badger of money. I have no idea what it is. But for all Bitcoiners, we're supposed to know what a honey badger is. That is our animal. The Democrats have the donkeys, Republicans have, the elephant, and we have the honey badger, right? And of course, if you ever want to make good AI art, you have great AI art that you could do anytime you want. It's very refreshing. And if you want to maybe be creative with your dollars, you could always mark it on currency with a little buy Bitcoin stamp. But once again, this is permissionless marketing that was happening. They've been building up the brand. It isn't just the tech companies that have been building it up, it's the people in the community. And what has that done? That's just turned not just Bitcoin from a brand that people market. So look at all these companies that are looking at this as such a valuable asset and a license-free asset. So for all you CFOs that are here that were thinking about how to, put Bitcoin on your balance sheet, don't forget, you can license the Bitcoin brand for absolutely nothing. It costs you absolutely nothing. So, you're seeing companies now that are putting, the Bitcoin brand, whether that's on Crocs, Pez dispensers. The Dunkin' Yo-Yo is pretty funny because it's the ups and downs of the Bitcoin market, so it's kind of cute. There's a sovereign energy drink for Bitcoin, so if you want to get jazzed up and make a lot of trades. But that one was actually inspired because someone brought up lightning rebates. So instead of recycling your can, you can unroll it and get your lightning payment rebates for drinking at loyalty points. My personal favorite is, for those of you who might have kids that are playing, any type of sport, you've got to get them a mouth guard now. Someone decided to make a Bitcoin mouth guard. They just put the Bitcoin B on it. If you think about the biggest investment in your life is your house, your car, probably your kids' teeth. So if you think about Bitcoin as a security backed, I'm happy that it's now on mouth guards. Sports teams are using it. But once again, this is uniquely the future, that this brand has become so popular that people are just using the brand because they know there's a community associated with it. They know that there's community values that go along with that. They know they can just sell it because Bitcoiners will buy it, but they want that community to be their customer. They're not afraid of like, well, Bitcoin uses too much energy or whatever FUD is being pushed. They're saying this is a brand that we want to associate our company with. I'm telling you right now, the companies that are doing this, the larger companies, it's not just people making friendly t-shirts. Everyone's looking at it. Now, some of you who are in like enterprise software, I'm not sure how you could put the Bitcoin B on things to sell it. But as you can tell, a lot of companies who are adopting the Bitcoin logo and brand that says, look, here's some of the values that we stand with. Obviously, this is a weird logo where the Bitcoin, where the logo, the brand values, do they stem from the white paper, right? You know, are we saying what's a peer-to-peer brand? What's a censorship-resistant brand? We know what a permissionless brand is. You know, you don't have the permission to actually do anything with it. What's a privacy brand? Does that even make sense? I don't know. The funny thing also is the white paper right there is for sale on Etsy. So in true Bitcoin capitalist fashion, people even sell the white paper. So I don't know a lot of brands where someone is selling their, you know, terms of service on Etsy. But once again, that's even things that are sold at the Bitcoin community that people are being able to sell against. And I want to bring up some of the interesting things or trends that are happening. This is PubKey. Has anyone been to PubKey in New York by any chance? All right, all right. There we go. Those are true Bitcoiners. What's funny is that's Tom right there. Tom was the first Bitcoiner at Fidelity over 6 years ago, worked on derivative stuff, was a lawyer, all those amazing things that would make your mother very proud. And now he's a bar owner. So I just want to point out, maybe just for all those of you in the room, don't stay in Bitcoin too long. But after being quite successful deciding to build out PubKey. Now, it doesn't use the Bitcoin logo. This isn't a bar that accepts Bitcoin. This is a Bitcoin-themed bar. That's how big this brand and this community is going, that when you walk in there, there's Bitcoin things everywhere. It's like, it is really just taking on the community. All the biggest events are happening at this dive bar, you know, in Washington Square Park. Now, when I say reverse franchise, what's happening now is a traditional franchise of a brand. You pay a big fee. You get, the large company tells you how you can market. It gives you certain regional guarantees that no one else will build around you. That's the opposite with Bitcoin. You create this brand. You don't have to pay anything. But someone could open up something up right next to you. No large corporation is telling you how to market. Actually, you're rewarded for the individuality, how much you embrace that brand and what you actually do with it. Now, why do I think dive bars are important? Because at every pub, that's what, you know, every revolution started at a pub, but it's a meeting place. For those of you who do customer tests and try to see how your software or see how your programs are being used, there's nothing more real use than someone who's a little bit tipsy trying to buy something with Bitcoin. That's the best way to see, does your actually software work? So this is literally a test bed for actually how people utilize Bitcoin as payment. It's a great way for people to walk in who go, look, I don't know anything about Bitcoin. How do I learn? And so when I say reverse franchise, I mean, that's the investment you now have to make if you want to embrace the Bitcoin community. They're going to say, what are you doing for it? How are you helping it? Okay, every Tuesday or Thursday, they literally go through classes where they're, willing to tell people about Bitcoin. Strangers come in, all different ages, all different walks of life come in and say, hey, I just don't understand anything about this. And someone at the bar is willing to talk to them about it. And this is how this grows. This is how this brand grows. How many people here have been to Bitcoin Beach in El Salvador? All right, very nice. Well, I recommend everyone head on down. But once again, we all know El Salvador has Bitcoin as legal tender, and that was an important part. But it was because a little beach of people decided that this was the circular economy they wanted to create. For those of you who go, I've been fortunate enough with Bitcoin Magazine to be able to travel the world and see people, utilize Bitcoin. And we have office in Ukraine, and even though Ukraine is one of the highest percentages of people use Bitcoin, you ask anyone about it, they say, no, I don't know what you're talking about. I don't know who has Bitcoin. Because once again, they care about the store value side of it. You go to El Salvador, people love to talk to you about, oh, Bitcoin's great. Yes, we want to talk about it, right? It's a different relationship in different parts of the world. And at Bitcoin Beach now, where El Zante, no one ever heard of it before this. And now all of a sudden there's an entire community that embraces this brand. For, real quick, is I have a 10-year-old and 8-year-old kid. Since I'm the president of Bitcoin Magazine, my kids say I'm the president of Bitcoin. So I'm actually really motivated to make sure Bitcoin succeeds, or my kids will think I'm a huge failure. But your kids always like to know what their parents are doing. They draw the Bitcoin logo everywhere, and it's great. And there's not a lot of places you can take them where they could see that. When they went over to Bitcoin Beach, and every hotel, and every restaurant, everywhere there was Bitcoin everywhere, it was so cool for them to see people actually with that logo and what that logo meant. It was seeing it in real life. There's the Satoshi bar. Things were named after stuff. It was a community that was excited about the brand, excited about the logo because it meant so much. And so now all of a sudden you have a huge vacation spot where people want to go to spend their Bitcoin, where every bar wants to do it. CZ over at Binance, the first time he ever used the Lightning Network in Bitcoin was because he went to get coffee and wanted to pay, and they go, we only take Bitcoin. And he asked them if they took, BNB, and they said absolutely not. So they made him download a Lightning wallet, and that's how in order to get coffee. So once again, if we withhold coffee from people, we can get them to adopt Bitcoin. But taking a look at this, the community, I think one of the things I'm really impressed with, and maybe it's because I'm a New Yorker, is the garbage cans all around the community. Someone donated a Bitcoiner, and he spray painted the Bitcoin B on all the garbage cans. Now, as a New Yorker, people spray paint everything in New York, especially dumpsters, so it's usually a sign that people don't take care of things. But it's the opposite there. It was like they took pride in it. There was nothing else on it. It was just this really simple orange Bitcoin spray paint B, and they said, hey, we want to just show that we're trying to clean things up. It's quite beautiful. It's a wonderful way to see kind of the brand in action. And I bring that up because now, this is how powerful the brand is. It's not about, here's a dive bar in New York that's doing something with this, or Pez dispenser doing something with this. It's the turnaround, it's the moment, it's the movement, it's the community that get behind what Bitcoin is, and that this symbol is something that they want to then attach to what they're doing. I'll make the argument that all of El Salvador, everything that they've been doing well is just solely based on Bitcoin. So all their turnaround, that's completely based on Bitcoin. That's the only data facts we have. I'm going to go with that. So I think, our success that every country should adopt it, because look at what's happened with El Salvador. But really, it's the kind of hope that Bitcoin brings to a lot of people. That was what was most important when you go to El Salvador. People are hopeful, people are excited, and the freedom that is there. And once again, for all of your companies, why do I bring up the Bitcoin brand? I bring up the Bitcoin brand because there's obviously a lot of ways for you to get involved in Bitcoin. We heard from the smartest people in the industry right here of where Bitcoin's going to be. Now, I understand I was a little bit lost on how we're going to clean up space debris using Bitcoin. That was literally and figuratively over my head. I don't quite understand that. I'm a simpleton. But, I think that if we are, when you're looking at some of these companies of how you can be involved in Bitcoin and what do you have to give back. One is, I would love for you to put Bitcoin on everything. If you have, the Crocs and the Pez's or whatever else in the world, I'd love for you to do that. That's the best way for us to get our brand out there. You don't have to pay, you don't have to pay anything for it, right? There's a community that's going to buy it. You can advertise it on Bitcoin Magazine. We'd be happy to do that. But, once again, that's pushing the brand out there. But realistically, when I look at this and I see Bitcoin accepted here, of course, we would love for more companies to accept Bitcoin. Just because you accept Bitcoin doesn't mean Bitcoiners want to spend it there. Once again, at Bitcoin Magazine, less than half the people that are our clients who purchase our magazine or tickets to our conference actually spend Bitcoin. So I want to make sure that that not everyone's looking to spend it, but Bitcoiners want to feel like they are accepted. This might say Bitcoin accepted here, but what that really says is Bitcoiners are accepted here. And for a lot of you, it's not just about, hey, how are you thinking about a form of money or the technology. For those of you who are looking for new customers, for new loyal customers, the ones that are early adopters, the ones that want to take pride in being part of that community. The sooner that you accept Bitcoin, the sooner that customer group is going to say, this is a brand that's with us. They might not spend your Bitcoin there. They might use their traditional dollars to do so. But they're going to think that you are on that journey with them. I think it's an extremely valuable part that, once again, we have unbelievable open source technology that people are developing for, money that's allowing the unbanked to have banks. But we honestly have the greatest brand and logo in the world that's being invested in by millions of people every day, that people are building on, they're creating unique things with, that they're making their own identity. And there's something truly valuable about that. So I hope you understand the power of that Bitcoin brand. I hope you not just accept it as a payment, but accept that little logo, whether that's in your store, on your website, maybe even in front of your, maybe not in front of your house. But you know, I hope that you think of the Bitcoin brand as something valuable. Would always love to talk to you or anyone at Bitcoin Magazine about it. I appreciate all of your time here and want to just say thank you very much. Look forward to seeing everyone in Bitcoin 2024 in Nashville in July. You're all invited. You can't stay at my house, not all of you, but you're all invited. It's going to be an absolutely wonderful time, and I want to say once again, thank you very much for this opportunity.
Thank you very much. The next session will begin at 4 o'clock. We'll take a short break now and start again at 4 o'clock. Thank you.
Choose your fighter. Lightning inspired. Fight.
Good afternoon. Just a quick reminder, we're restarting at 4 o'clock. So if you need to visit anywhere, please be sure to be back in here at 4 o'clock, please, just in a few minutes. Thank you. Good afternoon. Would you now please take your seats? The next session is about to begin. Would you now please take your seats? We'll be starting momentarily. Thank you. Good afternoon. Please take your seats now. If you could please be seated now. Thank you very much indeed. Please welcome back your host, Natalie Brunell.
All right, this is the fireside chat we've all been waiting for. How are we going to connect hundreds and thousands of companies on the Lightning Network? Well, we're going to hear all about that. So I'd like to welcome back Michael Saylor, Executive Chairman and founder of MicroStrategy and one of the leading advocates for Bitcoin in the world, and David Marcus, who is the CEO and co-founder of Lightspark. Lightspark is building core infrastructure on the Lightning Network. Most recently, David led all payments and crypto efforts at Meta. In 2018, David started Diem, which was formerly known as Libra. You might know it. He joined Meta, then called Facebook, in 2014 to lead Messenger, which he took from under 200 million monthly users to over 1.5 billion users. He was also previously PayPal's president. Lifelong entrepreneur David Marcus launched 2 companies in Europe, then founded mobile payments company Zong in Silicon Valley, which was acquired by PayPal. His story is fascinating. I've had the chance to interview him, but this is probably going to be a better interview. So welcome to the stage.
So I've been excited about this interview all week. For those of you who are not in the Bitcoin community, David is legendary in the community, and he's one of the most inspirational Bitcoin maximalists in the world. And he's leading the charge with regard to scaling the Bitcoin network and connecting corporations everywhere. And this is my chance to ask you all these questions I've been wanting to ask and never had an opportunity. So I guess, David, I'd like to start with, I mean, you've had an amazing career, you know, across all aspects of fintech, money, payments. You know, how has your career experience shaped your view of Bitcoin today, and what have you learned in the course of your career?
Of course, and thank you for having me here. It's such a great event with so many amazing participants. So look, I started my career trying to remove friction from payments, and you know, one of the first companies that I started was Zong. I mean, the company that led to Zong, which was a mobile payments company. And what we tried to do is remove a lot of friction. That company was acquired by PayPal. We did a bunch of different things at PayPal to reduce friction, acquired Venmo, incorporated all of these things. And in 2011, 2012, really got deep into Bitcoin, and it was a fascinating moment. Like this idea that I could send and receive money, and at the time it was the blockchain.info wallet with you know, non-custodial everything. It was really magical, this idea that you can send and receive money without any intermediary, without any centralized party. And then really things got clearer to me when I was leading PayPal. And in Argentina, they asked us to remove the ability for people to move money out of the country. And suddenly the price of Bitcoin shot up the day we did that. And it was really clear that people went to local markets, bought Bitcoin so they could actually get their hard-earned wages out of the country or where they wanted it to be, which should be a basic human right. And so that really, really inspired me. And then I went on to Facebook to do some non-payment related things for a while in Messenger. And I realized in late 2017 that basically the networks, the underlying payment networks where the majority of transactions were still happening, hadn't evolved in any shape or form since basically 1974 when Swift was invented, and that all of fintech was basically a little bit of lipstick on a pig. Like, it's better user experience on the front end, but still dependent on very archaic old rails that don't allow you to move money cross-border Friday after 5 p.m., and is still very costly. And so that's when we started the Libra journey. And at the time, we looked at Bitcoin and Lightning because that would have been my preferred way, but the technology wasn't mature enough. And so we did something that was more centralized, a stablecoin and a proprietary network that we tried to decentralize as much as possible. But we quickly realized that it was too centralized and probably had the wrong sponsor at the time. So it was shut down by the US government and other governments that for once agreed on everything. And it made us realize that actually the only asset that's neutral enough and decentralized enough to truly be the neutral settlement layer between all of the domestic real-time payment systems that have since then proliferated everywhere is Bitcoin and nothing else. And so that's what we've been doing at Lightspark since almost 2 years now.
So you started focusing on Bitcoin and the humanitarian aspect in Argentina. What was the year when that Argentinian event took place?
I think it was 2013.
So probably like the peso was like 10 pesos to the dollar, or 20.
Yeah.
No, 10. Probably 10 to the dollar. It's 1,000 to the dollar now, right?
Correct. Yeah.
So I don't know. The lesson for everybody is just as the peso was crashing, it still had 99% of its value to lose in the next few years. But getting off of currency debasement. I get Bitcoin is the neutral settlement layer. So where does Lightning come into all of this? What's your view of Lightning? What's the role of layer twos? How do you define a layer two? And help the audience, because you know more than anybody about that.
Well, so once you build the conviction that Bitcoin is the neutral settlement network for all payments in the world, you know that it's secure, you know that it's decentralized, you know that its value can't be messed with. You have to make it fast and cheap. And so Bitcoin is very secure on layer one, but it's slow. It takes 10 minutes for a new block to be added, about 10 minutes. And the fees, especially now that there are more things that are being published on the Bitcoin blockchain, the fees are quite high. And so here comes the Lightning Network, which is basically a payment layer two on top of Bitcoin that enables really fast, like near real time, and really cheap movement of Bitcoin. And when we started that journey almost 2 years ago, we realized that Lightning was actually great at a theoretical level, but really hard to operate for mainstream companies. And so what we did at Lightspark is we built an enterprise-grade platform that enables companies to connect to the Lightning Network without any of the complexities of running a node, deploying liquidity, opening channels, finding routes, splitting payments into smaller payments, and reassembling them on the other side to make sure that they arrive at the right destination. All concepts that are quite foreign for companies that are just looking to connect to an endpoint and send and receive transactions reliably. And so that's what we've been doing. And we're very happy that actually this week, Coinbase started launching support for Lightning on our stack. So that's a major milestone for the network and also for our company, bringing one of the largest exchanges in the world with 100 countries and about 100 million customers onto the network, which is a big milestone for us. Thanks.
So how long do you think Lightning has been mature enough that you could start to do the things that you're doing at scale? When did we cross that chasm or cross that barrier when Lightning was kind of ready for?
So I think that, for exchanges or neobanks or institutions that touch both fiat and Bitcoin, the time is now. The time is now to connect them to the network to enable fast, cheap, real-time movement of Bitcoin and other assets. The next slew of companies are actually companies that don't want to touch Bitcoin directly, but they still want global 24/7 settlement of payments and money. And so we announced this UMA standard that stands for Universal Money Address last November that enables consumers or companies to have things that look exactly like an email address, but for money, and uses Lightning and Bitcoin. But you can, let's say, send US dollars to someone in Mexico receiving Mexican pesos. It settles in real time end to end, but the consumers don't even know that you're using Bitcoin and Lightning, or businesses don't even know that either. And we think it's a little bit like email, where most people, if you're not a geek, you don't care about SMTP and TCP/IP when you send an email. And in this case, the same is true for Bitcoin and Lightning when you send a payment. We're trying to abstract it all to give people what they want, but leverage the neutrality and a global liquidity depth of Bitcoin against all the fiat currencies to make it really efficient and real time for people to move money around the world.
Yeah, so I mean, this stuff was, people weren't even talking about it in 2017 or 2018. So tell me a little bit more about LightSpark. You're primarily offering services to corporations. Tell me about your customers. What kind of customers do you have? And what kind of challenges are they trying to overcome?
So we have customers that are large exchanges like Coinbase in the US, or Coins.ph in the Philippines, or wallets and exchanges like Ripio that are very large in Latin America, or banks in Europe like Zappo. And others, and we're adding a tremendous amount of exchanges, wallets, and neobanks that can move Bitcoin. That's kind of the first category of partners. And what we do for them is actually give them an easy, reliable, enterprise-grade, non-custodial access to Lightning. So they run their own node on our stack, and they're able to send and receive transactions. And they outsource everything but the security. So in the case of the Coinbase implementation, they have their keys on their side. They sign everything. So from a security standpoint, they don't outsource that part. They still have this in-house. And then we manage all the complexity of Lightning. So you can send and receive transactions to an endpoint, to another endpoint on the network, reliably knowing it's going to happen even for larger transactions. You don't have to worry about liquidity. We provide all of the liquidity on the inbound side. So it's basically like, it's maybe the wrong analogy, but it's like, you want payments, traditional payments, you connect an API to Stripe. In this case, you want to move Bitcoin fast and real time. We provide that same level of API and SDK that you would expect from a traditional PSP and payments, basically.
Are there different classes of customers with different opportunities or challenges?
Yeah. So, the first set of customers are really the exchanges. You're buying or selling Bitcoin in an exchange. You want to move Bitcoin or bring Bitcoin to an exchange to sell it for another asset, and making all of these exchanges more fluid, more real time. That's a really key component of moving Bitcoin liquidity between exchanges and wallets. So that's kind of at the basement layer or foundational layer of what we do. And then UMA is more retail facing, despite the fact that we never touch consumers, but we empower banks and wallets and fintech companies to actually really build experiences that enable 24/7 money movement in any currency on top of Bitcoin and Lightning. And so that's kind of the combination of UMA and our stack that it's called LightSpark Connect, that connects on top of Lightning. So it's addressing, it's compliance. It's a messaging protocol that enables sending and receiving institutions to quote exchange rates between Bitcoin and fiat currency, so you can only display the fiat currency, and the entire underlying stack on Lightning.
Is it different for companies in Europe or South America than companies in the US? Are the requirements the same, or they vary regionally?
No, it's a really good question, because when you look at the average Bitcoin purchase on a lot of the exchanges or wallets in the US or in Western Europe, those are fairly large purchases. And then if you want to move that balance onto a wallet on layer 1, the fee is still high, but maybe acceptable. In a lot of cases, when we work with BitNob in Africa and Ripio in Latin America and many others, or in the Philippines, the average purchase of Bitcoin is maybe $30 or $25. And people are just stacking sats, and buying with whatever they can. And if you want to move $20 of Bitcoin right now out of a wallet or an exchange to another wallet on layer 1, the transaction will cost you more than your Bitcoin purchase. And so there, Lightning is indispensable, basically. Whereas here, it's just a matter of more convenience, faster movement of money. Over there, it's kind of a must-have.
Okay. So tell me about some of the other challenges they're facing. Your customers have compliance issues, and you talked about fiat conversion issues as well. You solve those? Does Lightning support those things natively? Have you built software on top, and how important is it?
So it's really important because our clients, for the most part, are regulated institutions. And so if you don't make things compliant for regulated institutions, in most cases you can't sell it to them. And if you do, then they get in trouble, and so you can't really build a business. So we had to do a lot of things to make Lightning compliance a thing, which it really lacked a lot of capabilities there. And so we enable a fully compliant solution for Lightning that enables them to abide by travel rule, that enables them to check the other endpoint or the institution that they're sending to or receiving from, and that's all embedded in the UMA protocol as well. And so we really enable regulated institutions to be fully compliant in sending and receiving transactions on top of the Lightning.
If you didn't do it, they'd have to do it. And if they had to do it, you'd have 1,000 companies all trying to do the same thing over and over again, right?
Yeah, and we provide a package solution that enables people using our stack to actually meet their compliance requirements.
And what about the currency conversions?
So that's actually a really cool experience, right? Because, you can be, let's say, in the Philippines, and you can claim a NUM address in the Philippines, and you can be, Michael at coins.ph. And I can be in, say, Europe, and I have a bank account with Xapo. I have $David at xapo.com. You want to receive Philippine peso. I'm using euros. So I can use my balance in euros, send you money, the value that I want to send, that can be denominated in the user experience in Philippine peso or euro, you choose. And then you hit the send button, and 1 second later, 24/7, at a very low cost, you get Philippine peso on the other side, which is currently almost a magical experience if you're trying to move money cross-border across an open network that developers can build on. And we're very bullish about this. It's going to take a long time for us to actually get a maximal reach of the network. But we're already starting early signs of huge promise for us. And that also is really interesting. I know there are many different types of companies in the audience right now needing to move money in all kinds of different shapes or form. And I think it's really important to pay attention to this because I think it can be a massive competitive advantage if you can actually either receive or disburse money globally faster and better than your competitors. You can actually build a pretty significant competitive advantage. And one use case that we've been thinking about is let's say that you're a platform that has a lot of creators, and creators, if they're not in the US, and most of those platforms are in the US, the long tail gets paid every 6 months. And so that holds GDP back, the global GDP of the world and people in different countries by a lot. And what if you could stream money in real time as people are actually getting views, or are gig economy workers, Uber drivers, or whatever, they would just get the money at the time they perform the task or they get views. And that would unlock a lot of value for the world.
So are we moving toward an era where I could send $20 to anybody's email address or UMA address in 1 second?
Yeah.
For a penny or something?
That's the goal.
You think more money will be sent in fiat currency over these Lightning rails than Satoshis are sent? Or what do you think will happen? How will people actually use this capability in reality?
So the way that I think about this is that in this case, Bitcoins are like packets Like if I make an internet analogy, Bitcoin are like packets on top of Lightning, which is kind of TCP/IP. And so you convert currency into the most neutral form of digital internet money that has ever been created for the time of 1 second, so that that value can actually be transported natively on the internet to where it needs to go. So it's cash final, real-time settlement, which is magical because right now, if you think about the correspondent banking and SWIFT and all of these things, the money doesn't actually move at the time the transaction happens. It's just database changes at the edges, but then people have to net settle later, and it's all kinds of complications that are unneeded. In this case, money moves on the internet natively, which is our goal, is to try to make money move natively on the internet like every other piece of data. And then it gets converted at the edges to whatever you want. And I think that's the way that most people are going to use it for a while, except if you're in a country where, of course, people mismanage their currency, and in which case you might want to receive those payments in Bitcoin, which is, of course, natively supported by the protocol.
So is Lightning the internet of money?
I certainly hope so.
If we're moving down the internet of money timeline, I'm thinking back to like 1994, and some random entrepreneurs in Arlington, Virginia, came to my office, and they were pitching me on the internet thing, and they told us our company needed a website. And I don't know, sometime thereafter, the big idea was, I thought maybe I should buy up strategy.com or michael.com or mike.com or hope.com, because it'd be really cool to have an email address like me@Michael. And then I thought about these other addressing implications, and now 30 years has gone by. So the question now is, if the internet money is just breaking, where are we? And maybe more importantly, how many companies are going to start working with this technology over the next 4 years, and then the 4 years thereafter? And if you had to look out over the next 10 to 12 years or something, how do you think this is going to develop?
So my bet is, let's take 10 years. My bet is in 10 years, every company in the world that needs to send payments cross-border will use Lightning to do that, either knowingly or not knowingly, but the underlying technology that will transport value cross-border for the world will be Lightning for any consumer and any company. And when you think about the opportunity is enormous. Like right now, SWIFT/correspondent banking processes still about $5 trillion a day. And that's with all of the constraints, right? You can't do it after 5 p.m. You can't do it Friday night or over the weekends. It's costly to send an international wire. So maybe it's not 5, maybe it's $50 trillion a day of value that really wants to travel, but is constrained by the current limitations of the system. And so all of that will actually transit onto Lightning and use Bitcoin as a neutral, almost TCP/IP packet or neutral value, digital form of value on the internet. And that's an enormous opportunity for all of us, and certainly for us if we succeed in making that happen on an open network like Lightning.
So people talk about 1 month settlement or 1 day or 2 day settlement, and you're describing a possible world where it's like 1 second settlement, right? So we're going from a day to a second, or I don't know what the order of magnitude difference is, how many seconds in the day or in the month, and then I guess we're going, in theory, we're going from a $10 fee or a 2% fee to what are the fees going to be? What do you think is what's the cost difference in the conventional credit networks like Visa and MasterCard versus the systems you're rolling out? Like how do the cost and the friction
Well, I think,
compare?
If we compare apples to apples, which is like not in time to settle, but cost-wise. Like if you look at wires, international wires, or SWIFT, or average cost between $40 and $50 for consumers or even businesses to initiate and complete a wire. And so, right now that also prevents you from sending small amounts. On Lightning, you could send 10 cents and make it very cost-effective and pay a very small fee. And so payments could actually really stream and flow on the internet natively 24/7, where value will accrue to where it needs to go. We're also moving to a world where AI agents are going to become more prevalent, transactional agents on our behalves and on behalf of our company, where we're going to give the authority through AI agents to accomplish a task and net settle with one another. So what currency are they going to use to net settle value natively in real time at a low cost on the internet? I can't think of any other than Bitcoin that's neutral enough for everyone to accept it as a standard. That's also a big opportunity on top of Lightning as we change our modalities of moving value around the world.
Yeah, I always thought of it as like achieving superconductance or low impedance, friction-free, or high frequency. You can't. I mean, there are certain applications you can't even think about in the old world. Like how would you swap money back and forth 100 times an hour or 100 times a minute? You wouldn't. Yeah, which sounds too fast, but if you're a musician, that vibration doesn't seem that bad at all. But it takes me to the next question, which is, so what kind of companies do you think would benefit from this, and what kind of killer apps or what kind of applications are going to drive corporate adoption?
So what we're doing right now is really getting all of the endpoints that are compatible with the existing payment rails and that have the ability to onboard the liquidity from existing endpoints that contain regular money onto this digital transactional network. And so those are the exchanges, those are the banks that can touch Bitcoin, those are different institutions that do that. But in a world where you'll have hundreds of millions, if not billions, of people that have an address for money that can be settled in real time in the currency of their choosing, you can imagine all kinds of new applications. Streaming money to endpoints is one of them. New forms of payments for merchants that would reach new audiences or new client bases that they can't reach. The ability to create brand new business models to enable people to actually contribute to anything that you're building from anywhere around the world. It will do to the world, I believe it'll do to the world and have an impact to the world that is going to be as important as the internet itself was in its own time for communications and for how much faster we're moving now, for better or worse. But like we went from the fax era to the internet era of email and instant messaging. But many people, when they were faxing back and forth, and you told them like there's an internet now that's coming and you'll be able to do email and all kinds of things. It's like, I don't need this. It's fine, right? And now, like, who's sending a fax, right? I think that's going to happen to payments and the way money moves around the world, and it's going to happen in this coming decade. And so I think that for everyone here, it's important to pay attention to this, to stay close to this, to get ahead of your competition, especially if parts of what you do depend on moving money faster around the world, and building a better experience for your stakeholders.
When do you think the big tech players like Apple or Google or your former employer, Microsoft, start to take notice and integrate or play in this kind of ecosystem?
I think we're not far. I think we're just getting to the stage where we've made Lightning really usable by people who are in the business of moving Bitcoin around the world. If you were to do that like 2 years ago, that's why many even large exchanges weren't on Lightning until recently. It's just like the amount of complexity that comes with Lightning if you're trying to do it yourself with no software or help is just very high. especially if you want compliance and high reliability and the ability to have like very high performance. And so that's just now. That's the now. And so now that all of these companies that are actually bringing the bridges to the traditional financial system onto the network are connecting to the network at a higher clip, now we can build applications. So UMA is one of such applications, and it's an open source standard. Everyone can build on it. They don't need to become a client of Lightspark to do that. Some people are actually doing it. Like some companies are implementing UMA without us being part of it. But that is kind of the moment where this network becomes usable by consumers in a way that's understandable without any of the complexity of Bitcoin or crypto or payments that are needing a new modality. And I think that once you have enough consumers that are using that, which is happening right now, then other larger tech platforms will pay more attention, because then they can actually take huge advantage, they can benefit from that and offer better services in businesses that are very global by nature.
So could anybody spin up a company in Africa or South America or Asia and start to work with these protocols?
Yeah, absolutely, 100%.
How do you balance, in your R&D effort, how do you balance the work that you do, that you make proprietary with intent to sell to your enterprise customers, versus the work that you put into the layer 2 open protocol?
Yeah, that's something we give a lot of thought to when we build something. And to the extent possible, we try to make things more open source and give it to the community so they can build their own solutions. And I think that's really important. For instance, having very, very high quality self-custody Lightning wallets, I think is very important for the network, and something that we want to contribute to and help companies building. Because the openness of the network over the long run is what's going to make this payment network different than closed networks that are the ones dominating right now. And so having open networks, having many participants building, having the entire Bitcoin community advancing the state of the art of the capabilities that we can build on top of Lightning and across Bitcoin is really vital. And so we want to contribute to that as much as possible.
When you think about corporate adoption of digital payments and Lightning, do you see a world where it's thousands of companies, tens of thousands, hundreds of thousands, millions?
Definitely millions. It's everyone, any company, and companies. I think during the River presentation earlier, Alex showed how big the global trade or the global movement of money is for companies versus consumers. And so companies in nature are more multinational than consumers, and they need to move money around for themselves, for their partners, for their stakeholders. And so having the ability to do that in a more efficient way in real time, not having to have a lot of liquidity sitting in foreign bank accounts exposed to FX risk, just being able to repatriate all of that money and send payments to where they need to be when they need to get there, that's going to be transformational for many, many companies.
Okay, so now I'm going to ask you a hard question. You've got dozens and dozens of customers all around the world. We're talking about the digital transformation of payments and digital transactions and pure digital, money moving the speed of light. Do you think, and that's against the backdrop of, Elon says he wants to make X Twitter a payments platform, and then you've got Google and Apple Pay, and then you've got innovators like Cash App that are very aggressive, and River, and you've got the Bitcoin players, and then you've got the US ecosystem, the European ecosystem, South America. I was just in Brazil. They seem to be very almost more enthusiastic than the US. So if you had to handicap who's going to drive the digital transformation, or who gets it, or who will be most aggressive, will it be traditional banks in the US or Europe or South America? Will it be the mega techs? Will it be mid-size fintechs? PayPal thinks, you see Cash App. Will it be pure Bitcoin companies? Will it be some crypto entrepreneurs or crypto exchanges? You know, at some point, someone's going to get a massive success and stampede everybody else here. But if you had to guess who's going to be the torchbearer here, how would you handicap that or assess the situation?
I think it's going to be companies that, in the payment space, build the best consumer experience, tapping into domestic payment rails and building the best possible experience domestically. So think of, like in the US, Venmo, Cash App, et cetera. But that then do a similar excellent job at connecting on top of something like Lightning with something like UMA or an addressing scheme that enables them to have maximum network reach of moving money in the currency that people want to the endpoint they want in a second at a very low cost. And I think the combination, by the way, that combination and the way that it comes across to consumers needs to be completely transparent. So you're using a payment app, and at some point you're going to use, like if you're in Brazil, you're going to use Pix for a domestic payment in Brazil. But now you're sending money to the US. Now I'm using, Lightning, but as a consumer, I don't know. I'm just sending reais to someone who wants to receive dollars in the US. And I don't need to know it's Lightning, but the companies that are going to build the best hybrid experience of bringing the best of domestic, fast, real-time payment systems and global interoperability onto Lightning in a super consumer-friendly way are the ones that are going to break through. I'm absolutely convinced of that.
Okay, so I guess we're agreed that this is coming and it's going to be a big deal. We've got a lot of corporate executives and IT professionals and other business leaders in the audience. What kind of advice would you give them as they proceed in their digital transformation journey if they want to put pure digital payments and your technology into their products or services?
So I think, first of all, pay attention because it's changing very slowly and then all suddenly. And you want to be part of the first batch when it happens suddenly and not be left behind. And I think that's really critical. And so the way to do that is really try to figure out what are the use cases in your companies that need to be revolutionized or that need to evolve when it comes to moving money between endpoints where you need money to move. And ask yourself the question, can I actually use these new technologies to move money to where it needs to be faster than my competition, cheaper than my competition? Can I have a competitive edge by doing that? And if so, there are lots of solutions out there, and certainly we can help, but there are lots of solutions out there to actually plug into it, even if you don't touch Bitcoin. You can connect to the Lightning Network and move dollars to another endpoint that needs to receive another currency on Lightning. And so pay attention. Try to figure out whether there are good use cases where you can start small, experiment with it, and then use it full scale once you're confident that it's built the right way. But it's coming, and it's coming sooner than you think.
How long would it take from the point that someone picks up the phone and calls you to the point when they could deploy a solution like Coinbase just did?
So it depends on the type of integration. On the back-end side, and without getting too much into the details, but we have a simple version of the implementation. In that version, within a few days, you can be up and running, sending and receiving Bitcoin to the other side of the world in real time at a very low cost. UMA, if you have a consumer-facing implementation that you need to do, takes a little bit more time because you need to integrate with your front end. There's a bunch of front-end work. And so I say if it's just back end, it's probably a couple of weeks of work with testing, et cetera, that will enable you to do that. And then we have partners, one of them is called Zero Hash, can enable you to actually connect to our stack without touching Bitcoin, and they will basically take care of the conversion for you to have access to the Lightning Network. There's a number of different ways that we can help you get onto the network without getting deep into Bitcoin rails.
So that means that pretty much there's no reason why every crypto custodian or Bitcoin custodian in the world shouldn't be integrating Lightning into their service stack.
Correct. There were lots of good reasons for them not to do this or not to prioritize this work until recently. Now there's absolutely no reason left.
Yeah, so everybody that's a customer of some Bitcoin company that doesn't support Lightning, you might want to go lobby, because now it can be done quickly and effectively.
And then the cost of managing that network to make it like super high performance and reliable is completely gone. It used to be, quite intensive.
Okay, so there are trolls and haters on the internet that complain that Lightning is not as reliable as they'd like it to be. Yeah. What do you have to say to them? Tell us about your experience with Lightning reliability, robustness, and how would you assess the fault tolerance of the network?
I mean, my best answer is just, now if you have a Coinbase account, I don't think it's rolled out to 100% yet, but it'll be soon. Many people around the world have Coinbase that can just try it for yourself, put it to the test and see if it works or doesn't work. And you'll find out that it works really, really well. And it's really magical when you can press a send button and send money around the world and it arrives a second later with huge reliability. I think, it's a magical experience. And so you can try it for yourself. So I don't like to talk about these things. I like for people to actually do it and try for themselves and find out for themselves. But I think, the critics were critical of Lightning for a reason. If you're spinning up your node and you're trying to find out who you're going to connect and open channels with other nodes to move value around the Lightning network, and then you're trying to have the liquidity in the right place so that you can receive payments, you have to have enough inbound liquidity. And then, the minute you receive a payment, your channel is all unbalanced. You need to rebalance that channel, and then you have to figure out how you split payments into multi-part payments, et cetera. All of these things are, the haters are right, that if you have to go do all of these things, it's just, it doesn't compute. It's too complicated. The same way that, no one is racking servers and configuring routers, the physical router anymore, because now you use AWS and all these things and it's easy, and now a lot of people can focus on what matters to their business rather than racking servers. Same is true for Lightning, and that wasn't true before, but now it's really as easy as it can be.
So you're providing an enterprise-grade Lightning platform that allows corporations to plug in a high-performance, fault-tolerant, compliant fashion.
Correct.
And that's been available for how long?
Well, I mean, I think, the level at which we're now is just, probably being, 9 months, I would say. So it's still pretty recent. So
you heard it here, right? This is year one of an explosive opportunity. Is it reasonable to say at this point that, given the fact that that Lightning on top of Bitcoin allows instant final settlement, not just of Bitcoin, but of other fiat currencies, doesn't it mean that we've now got a solution which is faster, cheaper, more reliable than any other crypto rails for moving stuff around the world?
So I think on the efficiency side, it's at par with other solutions that are out there, but there's a distinction, and I'm glad you asked the question. Other competitive solutions or different alternatives could be, you use, stable coins on, roll-up or stable coins on top of.
How's it compared to stable Tether on Tron?
Yeah, so that, for instance. And I think for a bunch of different use cases, this might be good. But the problem is, in this case, when you think about decentralization, you're actually trusting one centralized company to not mess this up. And the one thing I learned through the Libra journey is that doesn't really work long term, right? It can work for specific use cases where it's just an optimization. But I think that the centralization of trust is a problem if you want a truly neutral settlement network that enables people to really trust that no one's going to mess up with the network that moves money for everyone around the world, and certainly not a centralized corporation managing the entire thing, because then you're back to the point of the starting point, and it's not a truly open thing like the internet, right? And so that's the thing I learned the really hard way on the Libra journey, is that If you build any single point of failure, then eventually you'll have a problem.
Link.
Yeah.
And Lightning is the decentralized, fault-tolerant, non-custodial solution to all those crypto token networks that are collapsing. We've got a little bit of time left. Would you want to take some questions from the audience?
I'd love that.
Okay. So.
Hi, David. John King. What is your feelings about taproot assets?
So the question, I don't know whether people can hear, so I'm going to repeat it.
Repeat the question.
So the question was about taproot assets. So I actually think that bringing stable coins, other assets, other tokens on top of Bitcoin and Lightning is now an inevitable thing. And so there's taproot assets. There's a bunch of others that are also trying similar protocols to bring assets on top of Lightning. And one part of me is super excited about that, this idea that you can bring stable coins and optimize specific transactions that are in the same currency from the sender and receiver without having to do the conversion, which I think is going to be net positive. And one side of me is terrified about this idea that something huge could be built upon a centralized thing on top of Bitcoin, which has the beautiful nature of being like truly decentralized and truly neutral. So I'm equally excited and terrified about this thing.
Okay, next.
Hi. So if we think about sending value internationally, and say, for example, if I want to remit some money to India using Lightning, how does it work from legal perspective and capital controls, and how do you get around that from different jurisdictions which have different controls? So how does it work?
So we don't typically go around these things. We just abide by them. But so the way it works is that if you're using the UMA standard, the Universal Money Address Standard, the sender and receivers can know which institution is in which jurisdiction, and it's a pre-transaction messaging protocol. And so you can exchange the information that is required by your domestic regulatory regime. So for instance, now in Europe, travel rule is becoming a big deal, and they need to validate that. So you can do that natively within UMA. And the same is true in this case. If you're authorized as a regulated institution in India to receive international payments or send international payments, then you'll be able to do that. And you'll be able to have the right data exchange with the other institution to meet your compliance requirements. And that's all built into the protocol. And because it's a pre-transaction messaging product, or rather standard, that actually enables you to not get in trouble for accepting transactions that you shouldn't be accepting in the first place. Yes.
I have a question about sending Bitcoin through Coinbase internationally to, let's say, employees in India or the Philippines. If you buy it as property, but then you send it, can you expense it, but you're sending property? So it's, how is that handled IRS-wise?
Okay. So tax law question. Who wants to answer that? I'm not the right guy for that. Yeah, I mean, look, if you're online, so let me answer the question on the...
It'd be handled by the platform, you would think.
Yeah,
right?
if you're sending and receiving, let's say, dollars to someone, let's say in Brazil, who's receiving Brazilian reais, right? You're sending dollars. It gets transmitted with Bitcoin that gets repurposed, right? It's a little bit like, if you think about the small Bitcoin that is moving around like an Uber car on the Uber network, it's going to transport that passenger to the endpoint, and then it's going to make the trip back. And so basically, you're settling from a tax perspective like an international FX transaction, and not like you're moving your own Bitcoin to another person.
And I would say if you're just moving your Bitcoin, one Bitcoin from one custodian to another, it's just a transfer of your own property from one place to the other. It wouldn't be taxable.
Yeah.
Oh, well, If you're actually selling it in order to convert it to a currency, then there's going to be a taxable event one way or the other. But that would be handled by the platform that sold it. I mean, you would handle it there.
Okay.
Hey, David, quick question here. So in 2019, you testified in front of Congress.
My finest moment.
It was awesome. So now, 5 years later, how would you view the regulators or Congress? Do they understand it or they don't? What's your sentiment of view of how they look at it, these transactions?
They understand it better than when I testified, I think. I think that there are more and more people on the Hill who really understand it, and especially Bitcoin. I think, Bitcoin has a very special status in the land of, if you think of crypto as a whole, I think Bitcoin has a very special status in the sense that it's truly neutral. And I think many, many people on the Hill really understand that. And I think, you're seeing now all of the, very large Bitcoin ETFs that have come to the market from BlackRock and Fidelity and others. And so I think that at this stage, even if the image of, the Hill or regulators, it can seem to be more hostile to the industry in general, I think that when it comes to Bitcoin, the status of play is really clear. And that's why very large regulated institutions feel comfortable enough to actually move forward and issue brand new products that have a lot of reach with the confidence that they're within the rails of the current regulation and laws. So I think we're in a much better place. I feel like, when we tried to do what we tried to do with Libra and Diem, it was a very novel concept. The sponsor of the project, it was a terrible time at the time for the image of the company. It's so much better now, but it was a difficult time where there was a trust issue, there was a centralization issue because stablecoin was part of it. There was a brand new blockchain that you have to explain. And the beauty with Bitcoin is that, it's not something that we've built. It's not that something controls. It's something that's truly neutral. It's like a protocol that's running in a very decentralized way. And I think that's a lot clearer for a lot of the regulators and lawmakers. I think someone has a question here that they've been wanting to ask for a while as well. We'll make it work.
Thank you. It seems like there's going to be a race to the bottom. What is your revenue model?
I think that, look, it's kind of an interesting question because I feel like the competition, when the competition is 1,000 times more expensive because it relies on technology that's really archaic, you don't spend a lot of time thinking about that, right? Because the improvements of a brand new set of rails, brand new network that is open, that it enables full interoperability, that enables developers to build on top of it, and that enables anyone to build a competitive solution and settle on it in real time at a very low cost at the network level, is just going to create so much value that there's just going to be way more than enough for people who bring real value and solve real problems for real customers and real use cases to have a fair cut of the value that they generate for their clients. I'm very, very confident about that.
Hey, David, it's Ray Wong with Constellation Research. Question for you is, do you see the payment gateways and the payment companies like a MasterCard, Visa as your friend or as a partner, or do they see you as the enemy? Because you're basically coming in at less than a BIP, and they're coming in at 150 bips per transaction.
Yeah, so that's actually a really good question. And I'm not Michael, you called me a Bitcoin maximalist. I'm certainly, a Bitcoin pragmatist as well. And I think that the reality is that the payment networks have a huge moat especially with in-store payments because they have terminals everywhere. They're proprietary closed. And they provide a user experience which is amazing, right? It's no one actually complains that their payment experience, when they're buying a coffee somewhere, sucks. And I think that, many people in our industry have always fantasized and used this example of I'm going to go buy a cup of coffee with Bitcoin, and then you have all of these videos on Twitter of people or on X, scanning a QR code, and it takes like 50 times more time to actually get the payment going. And so I think the reality and the practical aspects of all of this is those networks will combine. And they will be used for the purpose where they're the best at. And certainly there's just going to be price pressure on a bunch of different things, notably online payments and merchant payments that are digital exclusively. I think that's going to definitely bring a lot of price pressure and competition. I think the physical world is going to be hard for a while still. And so I'm more of the mindset of trying to make Lightning compatible with all the payments network out there to extend its utility and reach. And that's what we're doing right now.
The reason I brought that up is because the margin compression coming from India being able to deliver first world capabilities at third world is happening, especially when you think of UPI. You're going to be the other piece that's going to float the rest of the market at those transaction costs. Mm-hmm. It's kind of like when we have a $100 drone going after a $1 million missile, right? That's the level of margin compression we're seeing in that market.
Yeah, yeah.
Thank you.
Hey, David. We've been talking a lot about international remittances. About a month ago, you tweeted AI's native currency will be Bitcoin. Can you elaborate more on that? Are we going to see new use cases, disruptive business models? What do you see?
Yeah, I mean, look, think about this way. Like, I don't know, maybe Satoshi is an AI. It's like, Bitcoin is so smart and clever that it's hard to imagine that only one person invented it. But think about it this way. If you're trying to move and net settle an exchange of value between a network of AI agents performing tasks for us humans, what is the currency that you're going to use? It has to be digital native, right? It can't be something that requires the friction of converting non-digital money into digital money. So it has to be digitally native. And no one in the world will accept any form of native digital value that's not maximally neutral, right? Because it's not like the Europeans are not going to accept an American version of a digital asset or vice versa. And so what is the most neutral form of digital native internet money? It's Bitcoin. And so if you make it super efficient, super fast, real time, at the speed of AI transactions, that's basically going to be the native currency of AI. And then, it's kind of this interesting thing where, a few years ago, there was this article that blew my mind that, Google Translate built AIs to do the translation service, which is really a mind-boggling service when you think about it, 20 years ago, like a thing that you can talk to and speaks another language. It's pretty remarkable what they did with it, with this level of fidelity. But they figured out that this AI that was actually using unassisted learning, unaided learning, came up with its own language. And it was kind of its own neutral language to basically translate one language to another using its own thing. And so what is it going to be for value between AI agents? Definitely Bitcoin, because that's the neutral language of value on the internet, native. And so I think it's like the most likely candidate here.
So what does the world look like when all nation states accept Bitcoin as legal tender?
I don't know about that. I think that's a hard question. I feel that, you certainly see what happened in El Salvador and in a number of other countries where they do. But I still think that for the vast majority of nation states that run a home currency that's a decent home currency, and I'm pretty sure that Michael will have a point of view on why it's not a good idea to keep a lot of your savings in those currencies. But I think for day-to-day payments, those currencies are good enough. I think that those governments will want their own currency to be that unit of account for day-to-day transactions. They'll want to be able to continue to manage their monetary policy that's either terrible or bad or good. But I think that's the reality of the world, the inescapable reality of the world. But I think some countries will want to do that. Some countries that need to get out of decades of mismanagement of currency controls and devaluations and massive inflation might want to look into that, and it might benefit them like it already did for El Salvador and others, like in terms of influx of foreign capital and all kinds of different things. But yeah, I think for the foreseeable future, at least, I think that nation states will continue to have their own currencies as the main thing, and take advantage of Lightning to net settle with other countries and enable their economy to thrive by enabling more capital freedom for their constituents.
I think we have time for one last question.
Hi, David Dax Hansen. You talk about native and also neutral. Can you talk a little bit about UMA and the end currency when you're moving from Bitcoin into the end currency, pesos, euro, dollars? Are those also going to be native tokenized balances, commercial bank balances, stable coined? What does that look like?
So today, the way that UMA works is, you're sending, let's say, from an exchange or a neobank that can handle both your home currency and Bitcoin. So at the time of the transaction, you're communicating with the recipient institution that's on the network. The recipient institution, let's say you're receiving Philippine peso, you're basically going to say, okay, my quote for every Satoshi or for every amount to convert to Philippine peso is that much. The sending institution, will charge a spread if they want, and then the transaction basically gets converted from US dollars to sats, pushed on the network, converted to Philippine peso at the end. And so in these cases, the balances are real fiat balances. They're not like, a digital representation of the currency. There's actual real balances sitting in your account the same way that you would for a domestic payment on those apps.
Well, thank you, David.
Thank you so much.
It's been very enlightening. Thank you to everybody in the audience. It's been a great audience today. We've got, I think, a cocktail event afterwards where everybody can mix and ask more questions, and I look forward to seeing you all there.
Awesome. Thank you.
Another round of applause, everyone. Yeah. Michael and David, great job. All right. That closes up day one of Bitcoin for Corporations. There is no second best Bitcoin for Corporations conference. We have another amazing day tomorrow with panels and keynotes, starting with Michael Saylor himself at 9 a.m. So make sure to come. And thank you so much to the sponsors, once again, of MicroStrategy World Bitcoin for Corporations. We'll see you tonight. Maybe we'll win some blue chips, right?